Very good morning. It's Tuesday, the 25th of February. Those of you who expected to be tuning in to see Luke Moore on a Tuesday, don't worry, he's not been eaten by Chewbacca. We have got my top student back for another masterclass. It's Ronnie. Good morning, sir.
Thank you very much for having me. No place I'd rather be this morning. And, I'm starting to get used to the disappointment feeling people have when they expect Luke and then I show up instead, or sometimes I call a market maker and they say, oh, it's a Luke. No, it's Ronnie. Okay, yeah, what do you want?
Well, imagine how little Luke Cooper feels.
Oh.
When they say, oh, are you the Luke?
No, it's Junior, Luke Junior.
Right, good morning. So how are you, Monkey Man, Maturin, Julian Musto, Bigabia, Steve Days in the house. Deckers is one of the most oversold stocks in the US market. I am still involved, Steve. And every day I get it, gives me another pounding. It got down to 141 yesterday.
Well, I like Deckers and we like the products that they sell. So,
yeah.
Are we holding?
Yeah, well, I mean, I'm short the 150 calls, so I mean,
you have to.
Sorry, 150 puts. R6N, a very good morning to you. Everybody's in the house early. Apologies for the delayed start. We had a bit of a problem not getting onto YouTube, but getting on to the main platform over at IG. So we might see a boost to our numbers on YouTube.
Let's hope so.
We got an extra big boost. Jugger in as well. Ronnie, what's coming up on today's show?
Let's see what we got here. 8:40 a.m. We got trade expectations with the Matt Arbor. Following that, 8:58 a.m. we have the all sessions opening bell with Tom Wolstenholme. And don't worry, I'm not the one leading the show this time. And then after that,
you are leading the show at 9:40.
I am talking shop. That will be our live podcast. Which will be recorded and displayed to all of you guys, where we are discussing the importance of having a trading plan.
And what are some of the highlights? What were if you were to give it a 5-second?
The highlight would be to the importance of a trading plan, finding one, sticking to one, and nailing that. So find your rules, follow them, and you won't go bad.
Excellent. I may have to watch.
Yeah, you most likely need it.
The way that yesterday went on my Tasty platform. Woo! What is going on in Nike? Tell you, let's talk about it in overnight action. Right, yes, we did see some big moves yesterday, some blowout moves in various directions. Our colleague Sophie Cocker messaged me yesterday and said, have you seen the Kardashians deal with Nike? This is a big thing. But this is the problem the market's got at the moment, is putting it into numbers, right?
Yeah.
Because it's now added $9 billion of market cap. Now, Kardashian's big, but is she that big?
I'm not going to say the first thing that
$9 billion of market cap.
I'm not going to say the first thing that popped out in my head, but I think, I think the importance here is that we don't focus completely on the sales that will be generated today. We have to look at the structure of this deal. It's a Jordan-like structure where they're going to have a joint partnership. They're going to continuously earn money from this and generate sales. And most importantly, probably what's more important than sales for Nike right now is the brand rebuild and positioning themselves with a, influencer and the market leaders such as Kim Kardashian. I think that would be very beneficial for them. So I think 9 billion, yeah, it's a lot of money, but I think in the long term, this will pay more dividend than that.
Now, the big move yesterday, of course, let's just look at how that traded. There we are. It's not going to work, is it? No, there we go. So the 3-hour chart. Yes, sorry, that seems remarkably long to go back to. Let's add that to the workspace and get this up for you just to show you exactly how this thing traded recently since the news that it signed this deal. So this down here, right? That is the downgrade from Citigroup. This is when this is when Nike, Elliott Hill, was going around New York speaking to the banks and sort of giving a bit of guidance as to how long this this plan was going to take to come to fruition, right? Now, JP Morgan say it is a 3-year turnaround story. I might say 2, right? I think that they get this really going in 2 years. But Jeffrey's coming out yesterday and Jeffrey's saying, you should be aggressively buying the stock here. Elliott Hill is working his magic immediately. And this stock places great value. Now that had the stock up 5% in a market that was pretty crap. For me, it's just too much.
I do see your point, and I can see both, sides of it. Turning around a conglomerate such as Nike is not an easy task. It takes a lot of time to rebuild the brand trust, to sort of move into these new segments and to adapt their products. However, Nike is a company with vertical supply chain, so they can quickly turn around new products and adapt to market trends. They haven't done so well, but now they're going to utilize that. They're positioning themselves in partnership with Skims and also with the retailers that they did well with. And we also have the World Cup coming up next year, which is an excellent opportunity for Nike because they're sponsoring a lot of players, a lot of teams. So
that I agree with. That I agree with, which will be June.
Year and a half, say. Yeah.
Right, so that's 18 months away, right?
Yeah, but I think that we'll see a good run up leading up to that. I don't think it'll be Skims now and then nothing until the World Cup. Mm-hmm. So I share your opinion that the turnaround plan will not take 3 years. 2 years is more realistic, and I think they're well positioned to benefit from the tailwinds that are coming their way.
Do you want to hear the JP Morgan consumer analyst, his comment yesterday was...
I'm thinking that it'll be completely opposite to what I just said.
No, it's very similar. He actually used a similar analogy in that he said it's like Nike's such a big corporate machine and such a big, obviously global sales-wise. This is like turning around the Titanic in the Hudson Bay. Now, I think what he was going for was like a huge oil tanker.
Yeah, because Titanic is it's quite small in today's scale.
Well, also, it didn't end that well. So, I do think. So, Biggie B is saying maybe wasted money. The market may like it temporarily. Will it deliver cash into the Nike coffers? Well, they certainly hope so. It does. And does Kim K still deliver, right? How long is, she's the same age as me, Ronnie.
Yeah, I can definitely tell by looking at the both of you. These guys look like peers. But to answer my man Bigger B's, I do think that Kim Kardashian still has a lot to give, especially in this sort of branding and marketing. Like my sister and all of her friends, all of our influencer friends, they all love Skims. They all buy it.
Really?
Yeah. Dubai, London, they all love it. They're all exclusively big Skims fans. And I think that, she still carries a lot of weight in this brand.
Yeah.
And so I think they've done really, really well with hitting their target audience.
So who's going to suffer then? Is it Lululemon?
I think Lululemon could be suffering, but they also have a strong, because that's the sort of the athleisure wear. That's where Nike's been lacking. Mm-hmm. But if we look at, for example, in China, where we saw that, I think Lululemon is well positioned in China because we see that LVMH, Kering, Hermes, all of these luxury wear, they're dropping in China. But Lululemon and Arc'teryx, they all gained more than between 15 and 25% revenue in China.
Yeah.
So I think whatever they might be missing in the US with the market share that Nike will take with the Skims partnership, they're more than making up for it in China.
Now we've got Bitcoin Trader on the chat saying Bitcoin is on sale this morning. It is on sale as it is. Shall we take a look at that? The lowest price in months currently. Ethereum also. Oh, wow. Oh, Bitcoin has just absolutely sunk. I looked at this about half an hour ago and it was at 91,000, 88,000 traded. Do we have that up on the screen? Can I see what we're showing? Thank you. Right, so 91,000, it was trading at 10 to 7 this morning. Now at 88,000. What is going on?
You know, as we all know, crypto and particularly Bitcoin, it works in cycles. So we have this sort of halving, will come down in value and then rally even further. We can zoom out the chart and we'll see evidence.
There must be something going on specifically in the last half hour, surely.
I mean, the crypto segment is it's sort of Pandora's box to me.
You think it's just gone through? Is it a technical level, I assume, that has been breached?
My question really is, and maybe the people at home in the chat can help educate me on this. Is this something that will, you know, are we reaching the halving, and is this where we buy, or are we just getting started on the downfall before it's time to buy?
This is just a minor retracement.
What does Axel have to say?
Yeah, we know what Axel would say. Yeah, it looks like once we broke through this 90,900 level from the 13th of January, that's when it's just given way. Absolutely. Well, that is interesting. I did not expect to see Bitcoin here quite as fast. I've got a bid in at 85,000 on my, not on a leverage account, of course.
No.
But
you're a pro trader.
I am a pro trader, Ronnie. Thank you for that compliment.
Caleb, what does Axel think about Bitcoin at the moment?
The trend is still your friend.
Well, I don't know if there is much of a trend there. Yeah, Monkey Man rightly stating the halving was last April. You are out, my friend. That's gone. That's done.
Monkey Man, thank you very much. That's
yeah, it's in. What? Sorry, I am tempted to get involved in Bitcoin here. I've got to hold myself back from the screen.
But there was also.
Let me just go onto my Revolut. Hang on.
Why would you want to short that?
There was also, if I'm not mistaken, there was a hack. I'm not sure who was the victim of it, but I think there was a hack with a couple of million Bitcoin stolen. Not a couple of million, but millions worth of Bitcoin stolen.
Right.
So that could be something that plays into it as well. I'm not completely sure, so I'll leave the information on that to Monkey Man.
Okay. Right, let's go on to what we saw yesterday. John Wood. Who expected that? John Wood. Monkey Man, okay, my hands are off. Not touching it, he says. I'll listen to my Monkey Man crypto specialist. John Wood, let's look at that.
Do you wanna, so for the people at home, I know it's hard to believe, but Rich and I actually talk outside of the show and might even consider him a friend at times. Except
when he pal last week.
Yeah, because he misspelled my name. But you know, we are friends, and we do talk during the day. So do you want to perhaps let the people at home know who informed you about the John Wood rally?
Ronnie did his job yesterday afternoon. Well done for doing your job.
Hey, that's what I'm here for.
So he messaged me straight away as a client of the firm and said, "Have you seen John Wood? It's up 34%. And then, of course, I went straight on. Now, it's not a stock that I tend to get involved in, even though it is a Scottish company. But the risk-reward ratio at 35 pence was too compelling for me to ignore.
Yeah, and look at the P&L. It shows itself. I'll take 20% of that. Thank you very much.
And I'd take profit on 20% of it as well. So I bought 30,000 shares at 35 pence, just above. And then Ronnie and I chatted some more, and I was just saying, well, the upside, I mean, the bid's probably 70 pence.
Yeah.
Right, and I'm just completely pulling that out of nowhere. But it's, if we look on the wider scale, right, they can't just come in and buy this thing for 50p or something. I mean, it was 70p 2 weeks ago.
Yeah, and the Abu Dhabi firm that came in with the acquisition offer, who they previously pulled it back. But when they did that, the offer was for 1.6 billion, and now the market cap is 200 million. So even if they double and they pay for double the price at 70p now, they're still paying, they're still getting a significant discount. So I don't think they have any problem with going up to 70. And in the words of Axel, trend is your friend here.
The one-day trend. That's it. So I mean, look, so Sidara have, or the company has admitted they're in talks. The talks might go nowhere. They don't know the level, but the company has admitted that it is true. They have been approached again. They're back in discussions. Look, it's either 25p or it's 70p. So you've got, in my eyes, I've got 30% of downside, maybe 35% of downside, and I've got 100% upside. Yeah. So I just thought, so I took up to 50,000. I had 20,000 into sell going into the close yesterday because it moved so quickly. Should we have a look at the 5 minute? Yeah, the first move was it up to 40 pence. Somebody paid 40 and then back down to trade 34 for a while. Didn't look like it was going to happen, and then it moved into the close. So, not the only stock to get bid for yesterday, or bid talk around. Chemring as well.
Oh, interesting.
So, let's have a look at the Times newspaper. Chemring and John Wood risk joining the mass exodus from London Stock Exchange. So, cool, that's a great picture, isn't it? That's more like Top Gun than... Wow, the defensive flares are made by Chemring. I didn't know that. Well done, the Times, on choosing the best picture. But yes, so Bain Capital looking at £3.90 a share bid for Chemring, value company at 1.1 billion. That was a 34 pence premium to Friday's closing share price. And rejected by the board. So apparently Bain preparing a second tilt.
Yeah, I mean, Bain did just lose out on Fujisoft in Japan against KKR. They had a bit of a bidding war there. So they lost out on that, where they were willing to go up to over $4 billion. So they do have capital to spare now, and they need to allocate it now. So Chemring could be a place to go. We discussed a lot about European defense stocks.
Yeah.
It seems like Bain does not agree with us. But yeah, I think it's an interesting stock to look at. How much more they will go up to. I mean, these sort of private equity firms, they are very price sensitive. They have their calculations and what they think the company is worth. So if they can go up to, higher premium, we can see something happen. But I'm not sure that's actually what's going to happen. What are your predictions on this?
Yeah, asking you guys out there, what are your predictions? Chemring and John Wood, what do we think there? I think everybody's stuck in the Bitcoin frenzy this morning, tracking it. Admittedly, it is a bit more interesting than John Wood, but let's just get that chart up in the background as well. Yeah, it has bounced 89. Oh, that's tiny. 89,000. Chemring at BP.
Oh yeah, BP.
That's the other one we need to talk
They
about.
are feeling the pressure from Elliott. So in my morning blast we got, yeah, that's what I was gonna say. So they've been pressured to abandon their plan to cut oil and gas, and I think this is something that's, falls straight into line with Elliott's been doing. They want a company to focus on where the revenue is generated. They don't want to look 10, 15 years ahead to hit net zero. They don't care about that. They care about what brings in the revenue and the profit today, and that's oil and gas, naturally. And we see oil pushing up to 74 levels. So this is the pressure from Elliott, and purely financially speaking, is the right decision if you ask me. If you look at what bothered or troubled Shell for such a long period and what was turned around by the new CEO that came in, it was the overinvestment in renewable and green energy. They want to make sure the BP doesn't go the same way.
Ah, so the earpiece is working. The guys have gone quiet in the gallery for the last 21 minutes. The mic's just been off. They taking a break there this morning.
That's because you're doing such a good job.
I've just been checking my earpiece. I thought it was broken. I haven't heard from them for 20 minutes. Right. So, yeah, a fundamental research coming at BP tomorrow. A fundamental research. And which, I wonder what they're going to have sold off.
So it was talks about, obviously the renewables sector and that sort of investment, but there's also been talks about the sort of retail operations of it, the gas stations, to sell those off and focus purely on extraction. So I think there's going to be a lot of, we're going to see a much leaner BP. Cut the fat, cut everything that is not core operations, focus on that, and get the figures up, especially the ratios.
Okay, we've got the Andrew McHale. We think in Wood Group will be taken over. That's right. The swoop has come with weak leadership, with disappointment after disappointment, and no CFO. He's off to the job centre. Yeah, Max asking for Vodafone updates. Any Vodafone updates? Yesterday, best performer in pretty much any European market.
Oh, sorry, I was just Vodafone triggers my narcoleptic tendencies. Yeah, go ahead, Rich. Cover Vodafone, will you? Scratch the itch.
So, Vodafone is essentially a German turnaround story. How do you get a German turnaround? By the government completely fudging democracy to go ahead and get stuff moving quickly. Unbelievable moves in Germany.
Yeah.
If this comes true.
I mean, yes, if. It's a big if. We have to, we talk about the Germans sort of, they need to borrow, to spend, to invest, to stimulate the economy. Yes, absolutely makes sense. But we also have to keep in mind that Germany has the strictest borrowing laws than any other European nation, or perhaps in the world. So for Germany to increase their borrowing cap, they have to make effectively a constitutional change, and they need not only a majority, a super majority to get this through. And we don't really have a party with that. So we have, what was his name, Merz?
Merz of the CDU.
Yeah, they got around.
Likely go into a coalition with the SPD.
Yeah, so but together they get around. They need 60% still.
Well, basically there's a minority blocking vote from the far right and Die Linke, the lefts.
Yeah.
They therefore can stop any big change to the fiscal brake. However, that's when the new parliament starts. What Germany are talking about is, because it's the CDU and the previous party, they're already in power in this parliament that is in session now. So they're going to go ahead and do it.
Yeah,
They've got the supermajority now. Now that is not playing by strictly, it's playing by the rules. It's possible, but it's unprecedented.
Yeah, it is unprecedented in Germany for the government to rule by, rule with a sense that they think is the best for the country. It is unprecedented that the German parliament is taking decisions in their own hands.
I'm so glad my girlfriend doesn't watch this show. Right, we're going to break. We'll be back in 2 minutes. We might have Ronnie kicked out the studio.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Right, back for the opening bell, Ronnie. We are going to quickly look at upgrades and downgrades before we get Ronnie ringing his bell. Yeah. Can we put that up, please, guys? Thank you. Right, upgrade, SocGen, €46 price target, overweight at JP Morgan. Philips outperform at BNP Paribas. Now, look at B&M. That is an interesting one. And the reason that I'm so happy to bring this up this morning is, away from the numbers, Neil saying B&M are suffering. Well, we've got a real two-way fight there. Morgan Stanley have upgraded them to equal weight. Goldman Sachs have downgraded them to neutral. Who was right and who was wrong? Well, clearly Morgan Stanley were right in this instance.
Yeah, they were.
And Goldman's got it completely wrong.
First time. Yeah, I mean, what really catches my eye was the SocGen. We've talked a lot about the sort of American banks, and now the European banks came along with it as well. We saw BNP Paribas did wonderfully well, UniCredit, and SocGen now has sort of, they're flowing with their rally.
Okay, it's 20%. You got 10 seconds to opening bell, sir. Get that bell in your hand and already. Yeah, so €46 price target. JP Morgan, it's trading 37. Let's open, let's get up and running. What is John Wood going to do this morning? What is BP going to do this morning on that big story? But general, yes, Scottish Mortgage Trust down 80 basis points to start with, down to the weakness in the Nasdaq. Renault down 4%. Was downgraded?
It was.
Yeah, downgraded Renault. Adidas down 1%. Is that the Nike effect coming in to hit Adidas?
I think more so than anything. They've really capitalized on the Nike downfall in these previous years. It seems like now the markets are realizing that Nike is back in the game, and the sort of Adidas play is perhaps no longer as attractive. So perhaps it's more of a take profit than anything else.
A lot of these shares taking a long time to load up this morning. So you do get a random opening. There we go. Now they're all showing. There we go. That's better. There's just that there's no up. There's no stocks higher on the day. That's why. So Vodafone down 75 basis points, 67.9. JD Sports down 75. Next down 60. Ronnie, what are you seeing in Europa?
Well, Airbus, they're up about 0.5% after it came out that, was it ANA? They ordered 77 jets, including both from Boeing and Embraer, but also from Airbus. So for Airbus, we all know that the demand is never an issue. The issue is the supplying of them and the delivery of the planes. So if they can deliver on that, the upside of Airbus is very good, but let's see if they can, but the market seems to believe so. Total Energies up surprising.
And on the downside?
On the downside, we got Renault, who's been downgraded, ASML, just a punching bag of Europe, unfairly so, if you ask me.
There is talk about more chip restrictions from the US on China, though.
There is more chip restrictions, and there's also less demand for it. Analysts from TD America have informed that Microsoft have cancelled 2 data center leases. Less data centers, less chips, less training. So ASML is one that will take beating from that.
Right. In defense world, we're getting more positive rhetoric in Germany. So we've got ThyssenKrupp higher, Rheinmetall higher, and Thales as well. So that is Rheinmetall. I think that might be new all-time highs this morning, actually.
Your girlfriend still holding?
She is. And Rolls-Royce. Let's see. Yep, new all-time highs in Rheinmetall. Look at this. If you are into German tanks, like Ronnie is, then new all-time highs. You could have made a lot of money from that.
Personally, I'm a pacifist, but I do love the stock. We've discussed this stock a lot. It's a great company. They're doing incredibly well. They're well positioned, but as we discussed, perhaps we've seen the peak of European defense stocks, but Rheinmetall is such a, they're quite diverse set of revenue streams, so I still like Rheinmetall, you know?
I sold a put in Lockheed Martin yesterday. So Lockheed Martin, of course, has suffered the way that defense spending, the Americans are a lot more realistic about it, that it has to be cut, but Lockheed Martin down 25% off the highs. I think they receive some of the benefit from this European defence spend. So I sold a put about 6% lower.
Why would you want to short that?
Agreed. Yeah, I mean, it all depends on if your theory comes to fruition that the Europeans are forced to buy American, which I think is very likely. So you know what? You're right, Rich. Hates to say.
Oh, John Wood saving my P&L on a murky morning, up another 3.3%. Hold me back from taking the profit, Ronnie.
What do we say? We think it's going up to 70. So hold on to your winners and cut your losers, as Axel says. I say get some ice in your veins, mate, because I think this one will continue.
Get some ice in the veins. Right, the bank's doing well. HSBC, NatWest, Barclays leading the board outside of John Wood. So HSBC up 1, and Barclays. Where is Lloyd's in that group? Not joining the party just yet. I did have a good day yesterday as well. Should we take a look at the currencies and commodities? Right, what we seen there, Ronnie. Decent day in oil yesterday. Actually, a bit of a recovery, wasn't it? Yeah,
no, they're doing surprisingly well. My prediction was that oil will trade around the 60 to 70 range. Clearly, I'm wrong, but the year is yet to finish. But yeah, oil is doing very well. They're doing very well, and it stays resilient. But what do we think about cable?
Well, cable, much of muchness, 126. Still think I'm surprised that it's quite so high. I am thinking that cable's more of a 122, but then look, the dollar has come off.
Yeah,
and it's come off against everything. The yen now 149.30. Wow, back below that 150 level. That is one of Axel's trades as well.
Well, I might jump on that. That actually looks interesting.
Yeah,
the really yen is looking appetizing.
I tell you what could change my view on the dollar if Elon sacks half the government.
Which he will.
Well, it's certainly looking like unemployment is going to go higher in the US from Musk's actions. Did you see the Tesla numbers this morning in Europe?
No, but I predict they weren't very well.
Down 50%.
Ooh.
Tesla January sales in Europe are down 50%. They are telling Elon get. They're not having any of it.
Yeah, I mean, I'm not surprised. Like, you're an electric car manufacturer, and you have your CEO that's going around and meddling in
Politics.
and not any kind of politics as well. Certain very, very right wing of the politics, and as we've said before, it's not, you know, alt-righters who buy electric cars. It's the latte drinkers. It's the soy milk lovers, and like me,
Those left-wing latte drinkers.
some would say, I wouldn't say that. I just say like people like lattes.
What's their choice of coffee got to do with?
You make that assumption yourself. I'm just saying that 1 and 2 might be there together. All I'm saying is we look at his behavior and his the way he's allying himself. It's not been taken well by the market.
Not at all.
And
other car manufacturers, electric vehicle sales were actually still decent.
Yeah, no.
was
It's not
absolutely
It's
testing.
not the market itself. It's Elon, and
I'd be so uncomfortable in that stock right now.
yeah, and I mean BYD is just continuously rallying. They're coming up with cars at every price range, and instead of focusing on creating a product that compete, well, he's focusing on sacking people in the government. Wow, look at John Wood.
John Wood up 6.5%. Ronnie with the best phone call of the week yesterday afternoon to me. Rheinmetall up 3. SocGen up 2% on that upgrade. So it was a 46 target, now trading 38.5. Has gone a long way. We are seeing GSK up 50 basis point. A little bit of a retreat into defense, isn't it? Because you can see Unilever down 3, Rio Tinto's and BHP, the iron ore producers, are some of the hardest hit, down 2.2, 1.6 respectively. Glencore 315 trading now, 315. And ThyssenKrupp now up 5.5 on the back of the, of course, supplying the steel to the defense manufacturers. Although you wouldn't think it would take too much steel to make a drone.
No, but it is necessary in bullets, is it not?
Yeah, but I don't think we use bullets anymore, do we?
Oh, it's a bit passé, is it?
Yeah, it's a bit, 1940s.
Sorry, my military history needs brushing up. Might have a session with Chris Bouchon.
He was coming out with all the quotes this morning. Fantastic. Okay, Starbucks. That was
Unilever down.
You call Starbucks, and ever since we talked about HSBC Premier accounts last week, I've been getting these adverts. They never stop listening. Starbucks sacking 1,000 office staff by email. Be careful, don't check your inbox. You never know what might be coming, Ronnie.
Well, I have to say that I'm quite impressed with Nico and what he's doing at Starbucks. He's doing changes at not only at the bottom level that we see it in the cafes, by streamlining the services that the guests get. And minimizing the product choice to make the selection quicker and better. But he's also streamlining the corporation itself to make it more lean. And 1,100 it was, people getting made redundant. It's not a lot in terms of their entire workforce, but it shows that they're going in the right direction, creating a leaner operation.
It might anger those left-wing latte drinkers, though.
That's true. They might go to Blank Street Coffee now.
That's a bit of me. Big fan of the Blank Street.
Personally, I'm a 99p filter coffee from Pret.
Well, I mean, it still tastes better than Starbucks, to be honest. So
yeah.
Right, Dale's boy makes a very good point on Tesla. I don't think it's the car sales story that's got Tesla where it was. It was them delivering the robots and the energy. Elon's words himself were a lot of people say that he's the boy that cried wolf. Well, now you can buy a wolf. And a wolf can pick you up from your house and drive you to where you want to go.
Yeah. I mean, they've been the ones that they've always said that, self-driving cars, that's going to be the thing. The EVs are just to finance that. So everyone's been sort of preying on this hope that they're going to have self-driving EVs and they're going to become the world's biggest transportation company. But they keep missing the deadlines, or the sort of unrealistic deadlines they're setting. In the meantime, we have companies like Waymo working in the silence, and they've already launched with Uber, and they have a wait list for people to start using them, and people are actually using them in Austin and San Francisco. So yeah, less talking, more doing for Elon, because his competitors are doing, and they're doing it really well.
Okay, let's have a look at the futures markets then, because we are seeing a little bit of a rebound. The S&P 500 was down as low as 59.88. Now we're seeing, it was been lower. It's back up to 59.88. Tech 100 still down 10 basis points on the day, but as you can see, yet again, money flowing into the underperformers, the FTSE 100s of this world. Germany now trading unch. It was down 25 basis points before the market. So we are seeing this continual flow out of US and into where you get better value.
Yeah, I mean, that's been the main theme, where we look at sort of P ratios, future valuations, and companies. Well, I think we've realized that the US is trading at an all-time high, and it's been fueled by, we have to keep in mind, it has been fueled by great results. Over 67% of the companies that reported now beat in the US. However, the question is, how long will this continue with the trade war coming up?
I'm sorry, I've got to take money on Wood Group. That's now up 9%.
Sorry, don't let me bother you with my analysis.
This is it's called Trade Live with IG, yeah.
Well, go on then. Bloody hell!
Take another 10. Right, I'm gonna take off another 10,000 here. 40.3. Never hurts to take a profit, Ronnie.
You never go broke from taking profits.
Never go broke from taking profits, unless your losses are as shocking as some of mine are at the moment. Lloyd is doing well. Lloyd is doing all right. Legal & General is not great, although bouncing from 235 yesterday. We've, I think I picked up some good Havas yesterday. That was, or it was on Friday afternoon. So Havas, 10,000 at 147.70, 10,000 at 148.90. Now trading 151. Glencore, some shockingly expensive stock at 327. So I bought 4,000 at 332, 4,000 at 332. And that is all hedged with some CAC and with some short FTSE as well. And then some BP for tomorrow as well. I've got 4,000 BP on the portfolio for tomorrow. See what Mr. Ochenschloss is going to say, what he's going to come up with. He's fighting for his job, isn't he?
Yeah, he's fighting for his job. Hopefully he got some stock options in his compensation, because he'll make pretty good money off those.
Why?
Because the stock is rallying.
Yeah, but I mean, your stock options isn't up 5%.
No, but he's going to hold on to them. He's going to retire, live good. Shout out to Elliot for making him, affording him to buy a beach house.
Where was it that the CEO during Deepwater Horizon, he runs a private equity firm now.
Is it?
Yeah. What was his name? What was the BP's CEO name during the Gulf of America disaster?
I feel like this is exactly the reason
Google exists.
Google exists.
Oh.
Anthony Brian Hayward.
Tony Hayward. Yeah. Tony Hayward now at private equity, an investment firm. In fact, I wonder if he comes back and bids for BP. That would be an interesting one, wouldn't it? Good morning, Boise. Good to have you. 8:16 a.m. What time do you call this, sir? And yeah, the CEO of Unilever is stepping down. That's exactly right. R6N appointing that house for us. So this morning at 7 a.m., Unilever highlighted who would be the next CEO, and the stock down 3% on the back of that.
They did have some positive news earlier in the week where they've decided to not sell off the ice cream business, but rather spin it off in an IPO. And it's going to be the biggest ice cream IPO in history at 15 billion. And they probably have me to thank for it. I am
a big eater of ice cream.
I have to admit, if I have one addiction, it's Ben & Jerry. I just love it, man.
Really?
I just love it.
But
I mean, I know it's hard to believe when you look at me and you see like this Arnold-esque physique. But yeah, Ben & Jerry, that's my
Arnold who?
weakness. Arnold Schwarzenegger.
Yeah, really? Not sure about that. Right, we got fast markets coming up next. This is the point of the show. We would love you to pop some ideas into the chat. What stocks would you like us to discuss? We're having a quick 2-minute break, and we shall be back shortly to talk fast markets.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome back to Fast Markets, the part of the show where we take your ideas and we, well, critique them and then see if I want to stick them in my own portfolio and make better money than I would do on my own ideas.
I am ready.
So, Roddy is ready in action. He has won the toss. So, you asking first, what stock?
We touched upon this morning, Bitcoin. If you want to trade Bitcoin, you trade MicroStrategy. What do we think there?
Ooh, I hadn't even thought about that. Oh, this is going to get killed today, isn't it?
Well, that would
this could be really tricky for Michael Saylor.
Yeah, it's going to be a sticky one.
Wow. Okay, so MicroStrategy, obviously the stock that is massively geared into Bitcoin. So Bitcoin being off, is it 5% it's down?
Something like that, yeah.
Bitcoin being down 5% is huge for this. There is a certain level where you'd start to get really concerned about the balance sheet of MicroStrategy. I mean, it's not up here, but let's say it dropped down to 75,000 or something. Then you start, this stock would just implode, assuming that they don't manage to raise debt or do a deal or something, But
yeah, and what's also interesting is that they're already overvalued. First of all, they're very geared. They've borrowed a bunch of money to buy the Bitcoin, but there's also a mismatch, discrepancy between the value of their holdings and the value of the company. So the value of their Bitcoin holdings was around 47 billion, and this was reported yesterday. Okay, and their market cap, is over 72 billion. So there's a massive.
So they've got a call option. They've got an extrinsic value call option on Bitcoin inherently in there. This thing's going to get murdered.
Yep, it is. Absolutely. And don't let the chart fool you, because the pre-market is not even open. This one is going to open and it's going to gap down.
I mean, where's Bitcoin? Let's put it this way. He better hope Bitcoin recovers before 2:30 p.m.
Mate, his stress levels.
4.4%. Oh, that could be really tricky for MicroStrategy today. Right, so 9 a.m., we've got 37 and a half minutes to wait until we see MicroStrategy on that open. That's going to be a really interesting one. I would not touch it with a barge pole.
I mean, a short position would be interesting. Sell. Caleb, sell. I want to sell, Caleb.
Yeah, really.
This is just
I wouldn't. I don't like trading Bitcoin on leverage, so therefore trading a leverage stock on leverage is just like shoot me now.
Yeah, that is steroids.
Yeah,
that is leverage on steroids.
Really dangerous. How to blow up your portfolio in as short a time as possible? Trade that. Trade Tesla. Dave Boise saying MicroStrategy could go a lot lower if BTC has a dip. Every leveraged crypto company implodes at some point. Name one that hasn't.
Yeah, I can't.
Yeah. So it's unfortunately, statistics would argue it's a matter of time, and today's certainly not going to be pretty. Right, back to you. I will ask about Apple.
Oh yes, Apple, the company, not the fruit. Anyhow, Apple, thanks. So they have announced a $500 billion investment plan in the US to position themselves to not be damaged by the Chinese tariffs. This includes an AI data center, server factory, in Texas. I'm wondering why you would place a server who need cooling in the hottest area of the country, but
government incentives. I would
yeah, probably. So I'm very interested in see how they're doing, and I'm very, very impressed with how Apple has handled this whole AI thing. They haven't plowed in billions in building their own or competing in a product that's not their core. They have instead partnered with the correct partners, and they stand to benefit from that. So I'm very bullish on Apple, and with the stock buybacks, it's also a very attractive company. Hate to admit it.
Sorry.
Hate to admit it, but they bought back a lot of stock, and it shows that the company is undervalued. I think Apple still has a lot to give.
No, it's not. I wouldn't say Apple's undervalued, but I would say it perhaps warrants its premium.
It does, and I don't think the exposure to China will be proven as damaging as one would expect.
Yeah. Okay, so Apple, very happy you'd be selling puts.
Yeah.
Happy to sell puts, or it's in the Ronnie.
No.
pension?
Sell some puts for me, mate.
Okay.
You're my sales trader today.
Yeah, exactly. I owe you one. Andrew McKelvey saying energy is cheap in Texas.
Energy is cheap. Yeah, that makes sense. Personally, I would build my data centers up in North Sweden, like Alphabet and Amazon.
Next to your Bitcoin mining factories.
Yeah.
Okay, next, what you hit me with?
Right. So we've got Nvidia reporting on Wednesday, and this thing is gonna shake the market. Broadcom, Nvidia, and Microsoft, they were all down yesterday. Going
into this, the stock's now trading 131. I think that's the perfect way we should be going into numbers, right? For me, that is a neutral share price. 140, little bit high. 120, too low. So we're Goldilocks number going into numbers. Now, CapEx. The number that people had in their models for CapEx on AI going into the year has now increased by about 30%.
Which is shocking.
which is shockingly good for Nvidia.
It's for Nvidia, it's good, but it's not what one would expect after the whole DeepSeek thing. But what's a bit worrying for me is the cancellation of the data centers by Microsoft.
I'd agree. I mean, so Microsoft Investor Relations are on a roadshow in Sydney at the moment. So they didn't comment, but the team that are roadshowing them did comment that, look, this is some temporary data centers and there was a rush for capacity. And this is them simply getting rid of the really expensive capacity because they're going to come in with lower cost.
I mean, all the companies, the sort of Mag 7 companies, Nvidia, of course, but like Meta, Google, and the others, they've all committed to continuing their CapEx expenditure. No one has said we're going to cut it. So, but the thing is with Nvidia, beating is not enough for them. They have to beat more than what the market.
This is why I say the stock at 130 is good, because they can just beat. The results can be fine. They can be, we beat by 2 billion and we raised by 2 billion, right? Which is what they always do. So I think if they do that, Jensen, you know, is the monorail salesman in The Simpsons.
Yeah.
He actually came out and he tried to tell everybody that DeepSeek, they're looking at DeepSeek the wrong way. That this will create more computing and therefore be better for them.
That, I mean, I see the point. By lowering the barriers of entry, there'll be more entrants to the market, competition will increase, and the need for differentiation would be higher.
Yeah.
So, yeah.
If there wasn't the tariffs in the background, I'd be pretty confident about this one, right? What can really throw us off is increased tariffs and none of these back doors into China v Singapore, that kind of thing, right? Which is blatantly still happening, but is that what's going to be?
My man Dale's boy is giving a shout out to Oracle, who I've been yapping about quite a lot. Oracle is a undervalued company to look at in this area.
Well, let's finish off on Nvidia.
Yeah, what's the verdict?
I would be, so I've got a 155, 180 call ratio. So I've got the right to buy, how many is it? 400 shares at 155, but then sell 8 at 180. Sell 800 at 180. So it's a 1 by 2.
That's
this stock's not going to 180.
No.
Right. So I'm.
And if it does, it comes back. It'll drop back from.
Yeah. So I would even roll that down to 170 now, to be honest, if it was a good price, because this stock's not going to 170. So I think if we wake up on Thursday and at 9 a.m. we see it trading I'd make you 139, 142. So $10 move.
$10 move. You know what? Just for the sake of it, I'm taking the opposite. So you're saying $10 up?
Yeah, well, 138. I'll give you 138. I'm higher, you're lower.
Okay.
What we having on it?
Mate, we still have like 3 bets going. Okay.
You have to get me coffees for a week.
1 coffee, mate. I'll get you 1 coffee.
2.
All right.
Done. Excellent. Right.
No, extra latte with soy milk for Rich.
With my avocado toast.
Exactly.
Right. Back at you then. Berkshire Hathaway, sir.
Berkshire Hathaway. I know Berkshire is not exactly a company that you sort of day trade, but I wanted to, bring it to the attention for 2 factors. One, they reported annual profits, which were at record levels. So they continue to benefit from the strong cash flow of the company. And the cash reserves are now at $334 billion, mate. $334 billion, which is
a lot of Occidental with that.
Exactly. So now that we're seeing, if we are to see the long-awaited market correction, Berkshire will be there to pounce. I think the stock is doing.
It looks so smart.
Yeah, exactly. And then one thing that's also very interesting is the past 2 years, he's been building up his exposure in Japan. And I think we all believe that, or at least I believe, that the sleeping giant in the east of Japan is waking up. And I think he's well positioned to profit from that.
He really is, and he's been increasing exposure there as well, to the financials in particular, I think.
Yeah, and we see American private equity firms, they're battling about resources and assets there. So Japan, his exposure to Japan, his strong cash power making him ready to pounce, and the strong cash flow of his holding companies, Berkshire Hathaway is very, very interesting.
Great. Okay, back to the chat then. Who have we got? Boise, exactly. We spoke about MicroStrategy. Monkey Man saying that Ben & Jerry's are his favorite chip manufacturer.
I agree. The only chip I can afford to buy.
Right. Sprouts Farmers, haven't heard of that one. SFM, that must be in the States.
Brussels sprouts?
GameStop, of course, recently bought Bitcoin as well at the top.
Of course they did.
But yeah, Microsoft wanting to concentrate on inference rather than training, which means they can use the chips from the middle aisle of Lidl. They think the money is in software and mass market use of AI. Now that takes us to Salesforce. Salesforce report Wednesday night as well. I actually think that's going to be the more important, more interesting one than Nvidia.
Yeah, I'm not sure if I agree, but I see the value in that. But yeah, Dale's Boy.
Both watch work.
Yeah, I agree 100% with Dale's Boy. However, I think Microsoft's sort of leaning towards inference rather than training is very well played, because there'll be much more people that will be needing of this, and the adaptation of AI as it becomes more and more normalized. They're well positioned to profit from this, and what makes Microsoft even more unique and well positioned in this is they actually already have a portfolio of products that they can commercialize this. Mm-hmm. The Copilot, the Microsoft Office package, the Teams, all of that. So Microsoft, very, very bullish on that, but Salesforce is one that is poised to benefit from the use and implementation of AI.
Good, right, very last one. We've got to take a look at Deckers because it just keeps falling. Just keeps falling. Oh my goodness me. So a quick reminder, okay, Deckers reported numbers have a huge wild guess where. Reporting numbers here. They said that numbers for next quarter are going to be down as much as 50%, and that's because they've basically run out of Uggs. Okay, the inventory is too low, so the sales of Uggs are going to be lower this quarter. Hoka also slowing, but slowing to still double-digit growth. This thing is now down to 23 times earnings.
I mean, it looks attractive to me, and also the issue of having more demand than supply, that's a luxury problem, and that creates even more demand. And we saw what happened with Nike when they had more supply than demand, when you no longer are being cool. People don't want what everyone has. So Deckers, I am very I might even pick some up in the demo at that level.
Ooh, Roddy's going demo, right? That is
getting cheeky with it.
That's your fast markets for today. I think we've covered some really interesting ground there. Absolutely. Dale's Boy, not a fan of Ugg boots.
Nor am I.
Well, good to know that Dale's Boy isn't a 16-year-old girl who's on our trading platform.
You never know.
Because that is certainly the market, isn't it? Although I do have some good slippers.
I'm more of a Lidl slippers type of guy.
Yeah. Right. Coming up next, we've got trade expectations with Matt Arbour and Angeline. Ronnie's off to get my coffee.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hey, welcome back to the show, and it is Trade Expectations with myself and Matt Arbour.
Morning,
Welcome,
Ange.
morning. How are you?
Yeah, good. How are you?
Still clinging on to the skiing glow.
Still clinging on, yeah. A day takes it all out of you, doesn't it?
Yeah,
You lose that holiday feeling straight away.
Oh, try and hold on to it. I'll come and try.
Especially a rainy day in London. At least the sun was shining.
Yeah, just get rid of that
Yes.
holiday feeling straight away. I did have a really sort of interesting time last year where I gave you a new nickname,
Oh, yes.
which was Safe Harbour. So I try and get all of the people who are on a wonderful show rotated out, trader friends, a week or maybe even 2 weeks in advance. So Matt can probably tell you how annoying I am, because suddenly you see all these things pinging up into your inbox, and it's me making sure that everyone knows where they are in the next 2 weeks. And then on Friday, Rich and I then hang out there after the show, and we fill in the sort of whiteboard. And if anyone listened to us, they think we're absolutely bananas, because it goes something like this: safe harbor, Ratigan, Tom work from home, Pega, Mega. And it goes.
It sounds like a quarterback play call. That's what I think.
What do you think?
So a string of, they say a string of words. Everyone on the team's meant to know exactly what play you're going to run when you say these code words.
So that the competition don't know.
The competition don't know.
It's good.
Apparently, you need to know your stuff to be
the strategy.
An NFL player, because there's so many calls to learn.
I've been told you got another nickname. Is that right?
Another nickname? I don't know.
Something to do with sister?
Oh, it's an old joke, isn't it? It's a joke teachers used to make at school. They used to go, "Oh, you got a sister, have you, Matt?" So what? Yeah. She's called Pearl. Pearl Harbor.
That's a good one.
That's a
good one. Bitcoin, another good one.
Bitcoin, yeah.
Ooh, falling below 90.
Falling below 90. Well, it's I suppose this continuation of, and you called it first yesterday morning, Ange, on the AI data center news that the market was slow to react on yesterday, and we saw when the cash opened, quite a sharp sell-off across AI.
Let's have a look at this. Let's show you the hourly chart here to show what we're talking about.
Bitcoin sort of following through on that, as it often does, sort of trending with those large tech names. And
let's look at Microsoft then. That was one of them, wasn't it?
I think it was Microsoft. Palantir yesterday really suffered again. Nvidia sliding. Of course, Nvidia results tomorrow, which everyone is sort of hanging out for, to see if that's going to change the slightly negative sentiment that we've been seeing in the market for the past couple of sessions.
So here is the play of the day. You ready?
Okay, here we go.
Yeah. So with the data centers, what is key is that there are two opportunities here, right? So if you wanted to go long, then you'd be looking, trader friends, at anything Nvidia says about, and I talked about this in detail yesterday, but I'll tell you again because I want you to pay real attention. If you want to go long and you think this is going to happen and you want to take a long position, the key word that you need to look out for is margin. Okay, for the Blackwell, because that is its family of super AI chips, and he's been trying to get them cheaper. Each time he lops off the price tag a slight bit, everyone gets really happy. The other chip is the H20, which is the only chip they can sell legally to China.
Yes.
Yeah, because the Americans are like, oh, I can't have them, having the defense systems faster now. So H20 is the only one. So look out for margins. If you want to short, if you think this is a short situation for Nvidia, and I know that Rich has got an options position here. He's got the right to buy at 155, sell at 180. Just whacking, showing you the chart here because we are still maintaining that key 115 support level there, and I'm watching for it to cross either below or above that 130, 131 level. But if you think this is a short situation, look for the keyword rollback. And we have seen this many times, right? Or anything that's like pull back, or we're going to reverse, or we're going to cut back. Anything that tells us they're going to either cut back on spend, anything to do with data centers, as we saw in the previous session. And we've seen this quite a lot already, right? We saw, it's not just Microsoft, but we had Foxconn saying, oh, we're going to spend 10 billion on data centers and servers.
Well, a lot of this is, of course, tariff dodging, isn't it? It's bringing stuff back on shore.
We're gonna hire how many thousands, right? Yes. In Wisconsin and places like that, and then roll back. And in some ways, this is going to be a key thing, because if you see this rollback of spending, then we might see a short-term short situation.
Because Nvidia is interesting because they didn't know what their market was. They make the chips that, you know, they're gaming chips, aren't they? Graphic processors initially.
Yeah.
And people find uses for these very powerful chips.
So clever.
Yeah, are they so clever? Did they get lucky? You know, the first wave of Nvidia was for Bitcoin mining, but it's a graphics processor. And then secondly, like the later chips, they are the best things to do AI. Okay, they're better chips than what Intel's making, that Taiwan Semiconductor's making, but they didn't design them initially to do AI or to mine Bitcoins. Then they optimized them. Whatever the next chip is, and will it have a use, will it not? I suppose that's really the key. What's in the pipeline? Do they know what they're designing for?
So at the moment, the new frontier is getting those chips for those data centers smaller and cheaper. So that is Jensen's next cash cow. So that's what he has his eyes on. In terms of the Blackwell family, they're just trying to get it cheaper and cheaper and smaller and smaller, so you and I can go to the shops and go, hey, you know that wonderful.
Buy some chips.
And put it literally go to McDonald's, get some chips.
Just do it. Do you have a Raspberry Pi? Do you do that? Do you do your own?
I have a Raspberry Pi, but I got sort of a third of the way through and then got a bit bored. So it's now sitting. Would you like it? It's now sitting somewhere in the utility amongst many of my things. It's probably sort of it's probably sort of in the same box as my vernier caliper, Andrew McKilvey, and Away the Numbers, if you're listening. Got a lot of clever engineers on the show. So the whole thing about Nvidia is they do actually, jokes aside, want us to go out and basically they don't believe in making the hardware, right? They don't believe in pairing up with your Microsoft or your Apple, because to them it's just a waste of time. What they want is for us to be able to afford what they're making, and we just put it at home in our home center. On God knows I need it, Matt. Have you set up your home with the smart home?
Well, I haven't. I'm
Nothing
able to
works.
turn on lights myself, you know, and long may that day continue. I'm getting old, but you know, when I can't and I need to link it to my phone.
Walk into the bathroom and my living room lights turn on, right?
Yeah.
So the sensors clearly are getting wires crossed somewhere. Boise, or Boyce the Voice, as his surname is pronounced. Nvidia new gaming GPUs have had a poor launch, some with errors and melting cables, no stock, but that's only a small percent compared to data center stuff, right? So there you go. Maturin also saying Nvidia currently has 83% client sentiment favoring long positions. Let's whack that up for you, right? Do you want to take us through that?
Well, it is a favourite. Everybody has sat there with Nvidia in their portfolios. You know, it's the stock you've had to own for the past 2 years, really, if you don't want to underperform the market.
Yeah. We're 10. And obviously, you know, this is a long position. That's not to say our clients don't do, you know.
Well, what we do see, there are a lot of clients will sit on a core and trade intraday around that. So there's the turnover in a lot of those top traded US names. And as I've said before, if you look on that shares fly out, that's ranked in the popularity on the day. We see a lot of the supermicros, MicroStrategy, Palantir, Nvidia, Tesla, which are often the top 5 or 6 names they're traded. The clients trading those will have a core position, but are trading around that intraday. So, you know, at the end of the day, they'll have netted off for the day, leaving the core, but the other part of the trading that's driving that activity is this day trading stuff that's going on top of it.
I like that. And many of our traders, you know, this is such a useful tool and we probably don't use it enough. And I've got it up right now on the shares page. So just talk our clients through this.
Well, it's just interesting. Just look at that list there, the Hims and Hers Health being on there. This is a stock that no one had really heard of, I suppose, in the UK 2 or 3 weeks ago. It's the sort of Wegovy alternative kind of, I don't know, I think they had an advert during the Super Bowl, didn't
that's
they?
Right. Yeah.
And suddenly that's driven. You can see that's the 4th yesterday. That's on like tracking. There's been no trading today. As of yesterday, this was the 4th most traded stock on our platform. You know, which is quite surprising, I suppose. The part of that is it was down 20%, but more traded than Alibaba, which of course had a very, very large move yesterday. It's interesting, but this, to get a sense of what people are trading and where the activity is, or to pique your own trading interest, this list is really, really good because clients are spotting the things that are moving and the activities there, and it's reflecting. You can see on the list. John Wood Group obviously cropping up there this morning. This talk of the takeover from the Saudis, a stock that's had a really, really torrid time over the past couple of years, obviously with finance chiefs resigning and various hints of accounting scandals.
Yeah. Some more than hints, actually.
Well,
some of them also interesting, I guess not so interesting, because, you know, we had that move, Bitcoin. So a lot of the Bitcoin related stocks, Mara, right, blockchain, you know, Coinbase, you know, all moving there. Andrew McKelvey, Wood Group, John Wood Group is also amongst this list there, amongst one of the biggest movers, up 6.75%. And Vodafone, Richie Rich, you're listening up. Vodafone also amongst the most traded list, down 0.4% there. But what's also interesting is that, you know, you have a really good sense just scrolling through the top few names of where the action is, right?
Yeah, completely. As I say, hims and hers wasn't anything I wasn't really aware of, and suddenly to see that clients are trading it.
Because you're so healthy, you don't need any.
Yes, exactly.
Of their multivitamins and their
why
weight
would have
loss.
something that that suppresses your appetite? Good Lord.
No, it's the last one of the last of life's pleasures.
Quite.
This coming from a man that I cannot get out for lunch, love or no money, or to head to the pub. He's very, very healthy. Monkey Man, I'm looking at HIMS at around 34 for a point of entry. Let's have a look at HIMS and hers. Caleb, have I got the size of my, or Phil, have I got the size of this right, or should I zoom out one more? Can't hear the guys in the gallery for some reason.
They're all online looking to buy their cheap Wegovy supplements.
So we were just saying, is my ratio right for the chart? Do you need me to zoom in some more? Great, this is perfect. So him and hers here, yeah, I think that is a good call, Monkey Man, 34 for a point of entry there, because, you know, sales of this, of its product still gaining ground, and this is despite the fact they haven't had proper, you know, FDA blessing and all that. So can you imagine if they did, right? You might get another push or another rush higher in terms of demand for their products, especially in a time when there's rising criticism over how expensive the Ozempic and the Wegovy's are.
Well, people will pay anything, won't they, for beauty?
Oh, like your hair.
Well,
We're just talking about.
Pay for my hair.
So this morning, I was listening to Ronnie Eggnog and Richie Rich as I was running in. And actually, I burst out laughter, almost fell over, because it's still kind of wet out there, still raining when I was coming in, when they talked about Kim Kardashian's Skims. You know the Skims?
Yeah, I know the Skims.
You know the Skims.
Well, Ronnie's wearing them every day, isn't it? You know, it's
looks so svelte.
Yes.
Yeah. And the fact that, you know, he was saying he has his friends have a hardcore following. And I think there was the word pairs mentioned, you know, pair trade or something, and he went, yeah, like those pairs, pointing at Rich, but they went swiftly on. I was like, I got you, Ronnie, I got that joke. So you know, all those people out there wondering what he was saying, he did point at Rich's chest. Bigger BS saying HIMS has been fighting the David Goliath fight with the likes of Novo Nordisk and Eli Lilly. The subscriber base is what I keyed in on, up 48% year on year. That's right, Bigger BS. Exactly, me too. And the fact that this comes before they've even had official regulatory, right, blessing.
Well, that anybody buys such a product without FDA approval is perhaps slightly worrying. But I don't know. But then of course Purdue Pharma got their FDA approval, and look what that did for people.
With that in mind, we have to go to break, but stay right there because this is a very short break. We'll be back with all sessions open here at IG.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Ding, ding, ding. Welcome to All Sessions Opening Bell with myself and Tom. Work from home, not work from home today. Live with me in the studio. Welcome
Good morning.
back. Good morning.
Thanks so much. How are you?
I'm very good. We've got this applause system now. So I don't know, but you can't hear it because you don't have an earpiece, but there's this big applause.
No, I've seen the sound effects. I've asked for them to be turned off.
Oh.
Yeah.
Oh, boo.
Too easy, isn't it? Yeah, it's just typical.
Yeah, typical.
They've still got the sound box. That's good to know.
So how are things with you? We've missed your DIY updates.
Yeah. Well, I mean, you know, last week we were talking, weren't we? And you said something like, you know, I bet your wife shops at
Fortnum & Mason.
Yeah. And I said she's not posh enough to shop at Fortnum & Mason. Immediately she was texting me, I am posh enough to shop at Fortnum & Mason.
Oh, no.
She never watches the show ever, right? And she just picks the one time that day to watch it when I'm mugging her off live.
Wow.
So she's sending me pictures of her Fortnum & Mason tea bags.
Oh,
and being
my
like,
goodness.
You know,
I didn't know
you
that.
caused me a right pickle there.
I only said Fortnum because it popped into my mind because I'm hosting the top female traders event at Fortnum quite soon.
Awesome.
For the International Women's Day. So it popped into my mind and that's why I said Fortnum. But, you know, hey, I've only bumped into her once. I don't have her number. Really,
You're not getting her number.
I wasn't, there was no setup yesterday. And wow. Oh, they're going to ding. They've been, why don't you ding? Oh!
I've never dung before.
Oh, you can still
It's the
continue.
past participle of ding to dung.
Yeah, ding, dung.
Oh,
Yeah.
what the hell is this? It's a piece of crap.
It's what Richie Rich bought off Amazon, right?
Well, it's
I know.
useless.
Trader friends, if you have a bigger bell, that didn't come out right, or would like to get us a new bell, a bigger bell, please send us your donations to us@ig.com because we would like a bigger bell, like one of those where you press them with like fireworks.
Yeah, that'd be
One of
better.
those.
That'd be a lot better.
Let's have a look.
All sessions.
At all sessions for you right now. Let me get my list up now that you've distracted me with the bell. Here we are. Here we go. Right. Take us through some of the winners.
So what have we got? At the top there, Novo Nordisk, Direction, Virgin Galactic. Any surprises in here?
Well, NIO is I guess it's been bashed recently as well. NIO is a bit of a surprise because it's up 2%. and it's had a recent run of bad news. NIO, one of those that has had a lot of criticism because, you know, they're not innovating fast enough, and also the whole EV sector has been thrown into chaos given Trump has gone down the drill baby drill route, and Elon Musk, obviously head of Doge, has taken his eye slightly off Tesla for now because he's Trump's BFF. So the entire sector is slightly under caution at the moment. So NIO is now, bouncing back by around 2%. Just looking at the others, Best Buy up 1.4, JD.com also up 1.2, Baidu there up 1% as well, and Pinduoduo is up 1.6%. So a really strong retail theme there. Ever use Pinduoduo? They're like the cheaper version of Alibaba. Like, imagine a cheaper version of Amazon.
It's what, similar to Alibaba?
Slightly different USP. So Alibaba is a bit like at the Amazon for B2B. And it likes kind of like, well, you know, if you're a company creating lots of different products, but you don't want to go and hire a big plant, you can outsource through them and open tender, right?
Okay.
PDD, Pinduoduo's USP is they're still online, still like a marketplace. They'll kind of go, hey, we noticed you're doing up your mansion, but then you've got 5 other neighbors also doing up their roof at the same time. Well, why don't you guys club together? If you get your mates around you to buy these materials, we'll make it 30% cheaper for you.
If you get other people buying at the same time off the website.
So it's like a community
right.
sourcing.
Oh, cool. No, I've never heard of it.
Yeah, PDD. Anyway, Alcoa also up slightly. Yeah, PDD. Okay, the short for Pinduoduo. It stands for, what it means is together more and more. Get it?
Together more.
Yeah.
Because because you're getting that discount if you're working together.
Exactly.
Love it.
Love it. He speaks a different language. It's great.
With you as a coach, anything's possible.
I was saying, we need to clone you. You're like, save it for the show. Right, let's take a look at some of the losers. Take us through the losers list there.
So we've got him and hers at the top there, down the most, 17% today. I think you were chatting about this with Matt earlier, I think. Supermicro Computer down as well. Also Robinhood, MicroStrategy, CleanSpark, and Coinbase. Any surprises there?
Nah, not really. The Bitcoin related stocks are all being whacked because of that big move lower by Bitcoin. Monkey Man saying he's and several others watching the space. Monkey Man saying Tesla, won't be surprised if it drops to somewhere around 280. Let's have a look at Tesla if we may. You like Tesla?
Do I like Tesla?
You're a fan
I don't have
of
a
the
position
stock.
on it, if that's what you mean.
And the car, do you like the car itself and the mark?
I've never driven one. Have you driven one?
Yeah.
And?
Or I've not driven one, if that makes sense.
Doesn't make any sense.
I tried out the auto drive on the Model X.
Right.
You just sit there.
Oh, I see, where it drives you.
And you put your hands, at that time you had to put it near the handles, but now apparently you can put it on your lap. So the drive assist.
Yeah.
And I did it on that motorway just by Canary Wharf, you know, that motorway, that stretch. Mm-hmm. And really freaked me out. I mean, I didn't get killed.
Yeah.
But my point, trader friends, is that I don't want this auto assist if I can't read a book or I can't do something else. It was like you had the stress of driving.
Yeah.
But then you weren't driving, and then your foot had to be on the brake, and then your hand still had to be on. I might as well be driving.
But it's a work in progress, right? This is like early stages. You know, everything's not that great at the start, and it builds.
Like us on the show. Right, let's take a look at Tesla for Monkey Man here. You're looking, you're saying you won't be surprised if it falls to around 280. In fact, I won't be surprised if it falls lower than that, if the whole Trump and Musk relationship falls apart, and will at some point. Two big egos in a room like that. But 280 is quite a fall. It would have to, Monkey Man, first break through, and we're kind of close to that right now, that 30360 level, and then perhaps then it will fall down to your 28 level. But yeah, watch that break out to the downside there, and that will give you your entry into that thesis. Away from the numbers, saying sounds like you have your very own test track. I believe it's Neil, your real name. There's some perks to having covered auto shows for such a long time, which is great because you get invited back to test out the new models because you become their test bunny. My insurance is very high, the premiums.
Because of all those crashes?
Well, I have to sign a lot of things. They don't just let you loose on any of these cars at the... I'm sure it's been picked up somewhere that, you know, each time I sign it, it goes into some algo that, you know, she's in the latest Mercedes going around a test track.
Oh, I see, because it's noticing that you keep driving all these...
Yeah.
Okay, yeah.
And a lot of them are fast cars, right? So I'm sure it's logged somewhere.
That, I mean, look...
Oh, she's in the Lotus now, but she just signed another document for, yeah.
You're assuming this, but your premiums could just be high because of, dare I say it, you're a bad driver?
I've never had an accident, touch wood. But the only thing is I've had a shave with one of those horrible, horrible bell bollards that they're dropping all across London, which is another, I basically blew out my tyre because I couldn't see it. It's just like a grey thing. Different show, that one, people. All right, let's get back to the all sessions here. The other one I want to look at as well is, of course, we were asking the other day, lots of our trader friends saying, can we talk about pair trading?
Yes.
Yeah, so let's do that.
Should we do that?
Yeah.
Okay, pair trading. So it was asked last week, because it's been coming up a few times, can we talk a little bit about pair trading and how it works? So pair trading is all about, first of all, identifying two highly correlated stocks, or it doesn't have to be stocks, any instrument, but often it's used for stocks. Two highly correlated stocks, which means that they move together. So if they're highly correlated, they tend to move together. And there's a coefficient that measures this that we can look at. But ultimately, if you've identified two highly correlated instruments, you want to spot when they diverge, when they move away from each other.
So like when oil goes down, then airline stocks tend to go up.
That could be an example. So if we bring up my screen and we can just look at this little diagram.
We're being told that we need to tease Trader Tools so that we get a nice book cover for this, because we're going to clip this up, trader friends, and we're going to post it so you can easily, I'm not pointing at you, I'm pointing at that. You can easily be able to find it and watch it again and again. You're going to watch Tom work from home again and again, explaining this, and myself taking you through it at your own leisure. So stay right where you are.
So smooth.
Welcome back to the show. And this is a special segment on pairs and ATRs with Tom, work from home.
Excellent. We've teed it up nicely. So we're going to talk pair trading. It was a brief intro before, but pair trading is all about the ability to identify highly correlated instruments, spot when they diverge, and essentially take a position, a bet that says that they will converge again. So this diagram here is an abstract diagram showing the price of two things moving. And if these two things are correlated, you expect that they will revert to the mean, revert together at a point in time. So if you had a classic example that people use is something like Coca-Cola and Pepsi, right? They both sell pop.
Yeah.
Right? If pop's going well, they're both doing well. If pop's not going very well, they're both not doing so well, right? Those are a classic example of two highly correlated stocks. So if they were to diverge from each other, you could make the bet that they will come back together again. So the trades that you would make is you would make two trades. You would make the stock that is above here, like this one, that you expect to come back down again, is the one that you would short. And the one that has moved down is the one that you expect to come back up again, and that's the one that you would go long on.
I like it. I like it. So it's similar to when I see oil prices go down, I think airlines, their stocks go up, right? So you have that divergence. Another really cool one, and I think I mentioned this earlier today when Maturin, is that how I say your name? Maturin, you could be French, asked about cocoa. And I said one good one to look at is when cocoa prices, and they've been on a tear last year, if they go down, like we're seeing right now, then a good one to keep an eye on are the cocoa, the users of cocoa and producers of chocolate, you know, like your Lindt and Springs, like your Bai Caribou, and some of the ETFs as well, Wisdom Tree, Leverage Cocoa, because they tend to head the other direction.
Okay.
Because if their raw material product is becoming cheaper, their margins become fatter.
Yeah.
Right? So that's really interesting.
It is, and you might be thinking, how can I identify these stocks, and also how can I see when I would say that these are diverged and could move back? So a couple of things you can use. So I found some useful tools on TradingView, which we've covered before. If we just bring up my screen, we can see what I've done here is I've put two different stocks on the same chart here. So I've put on Microsoft and I've put on Apple, two other traditionally correlated stocks. So here this is showing the price of the two as they move, and you can see a certain amount of correlation there, and you can see at the moment they are diverged, right? They have moved apart from each other. So that's one view that you can use. TradingView, if anyone hasn't used it before, you just go to tradingview.com. It's free to use. You make an account, and once you're logged in, you can use their charts package, and it's a good way of putting two stocks on the same chart at the same time. So this one is just looking at price, right? So down the left-hand side we have the price of one stock, and down the right-hand side you have the price of the other. That's one view you could use just by eye to say, are they moving apart or are they coming together? Another way is slightly more involved, but what you can do is you can divide the price of one stock by the other, right? This here is the price of Apple divided by price of Microsoft. And so what this is showing is, this is showing the correlation between the two. And so by adding Bollinger Bands, I can see when the stocks are diverging and converging. Does that make sense? So for example, I've got a chart here to make it that's annotated to make it nice and easy. So if you're looking at the relationship between the two, once that breaks outside that Bollinger Band, in this example here, you would go long SPY, because that's what this chart is, and you would go short USB. And then the profit would be, as they converge again and come back to the mean, that would be your profit. So instead of just looking at the two prices, the two lines, the two stocks moving, you can look at the relationship between the two. And you can see, for example, here, this would have been a potential opportunity to go long Apple and short Microsoft. Because the key with the pair trade is that it's a market neutral strategy.
Yes.
So it doesn't really matter what the market does. It's all about the idea that those two instruments will converge again.
And one of the key ones we talk a lot about here on the show is, can you punch up on TradingView just to show Bigger Beer saying, thank you very much, Tom and Angeline. You've just switched the lights on for me with pair trading. Really helpful. Some others also messaging to say, you know, let's have a look at this a bit greater in detail. I know Germany 40, or rather the DAX and the FTSE have both been on a tear recently, but they are really good, you know, on all days, all things being equal, right? It's like no election surprise, no noise, they tend to be a good pair. So can we pair that up on TradingView whilst we are on this, so that our viewers can see it live in action?
Sure. Okay. So what we can do is we can take, so you want a DAX, which is an index. So if we go for DAX here, so we've put DAX on the chart. I'm going to get rid of Coca-Cola here. We don't need Coca-Cola. So we've got DAX, and then I can add another symbol. So the other symbol you wanted is, Ange?
Yeah.
You want a DAX and?
FTSE.
FTSE. So if we put in FTSE, we can see the two on the chart. So that's one way of doing it. You can see the two of them and how they're moving next to each other. The other thing I suggested was you could do DAX divided by FTSE. And then what we're seeing is, and we'll get rid of this one, we're seeing the relationship between the two. And if we added our Bollinger Bands.
Go on, whack on a Bollinger.
You love a Bollinger Band, don't you?
Oh, I love Bollinger.
So here we're seeing the relationship between the two, because this is DAX divided by FTSE. And what we can see is as it breaks outside one of the Bollinger Bands, that would be an example. So as it broke down here, that would be your cue to go long DAXy, long DAX, short FTSE.
Actually, in the Refinitiv icon world, you'd be right because it's .gdaxy.
Oh, is it? Okay, so I was right by accident. So you're comparing the two here, and what you're doing is, as they break that Bollinger Band, the contrast between the two is giving you that cue, just like we looked at here, to say, as it breaks outside, that's your cue to go long one, short the other, because they are diverging.
That's fantastic. So you got that, trader friends. It's whatever your instrument you're looking at divided by what you want to pair it with.
That's one way. That's one way, because you're looking then at the relationship between the two. And as one drops, as it drops, you're saying that the first one is falling.
Perfect.
Compared to the other.
So talking about that, some other really cool pairs to consider as well is if you are looking, for example, at stocks that are, I would say, start with the less volatile stocks, because you don't want a huge amount of volatility when creating pairs, but just showing some of the items on my watch list here. Microsoft, for example, you could pair that off with another company that, for example, creates data centers, and one that is not doing as well, but has perhaps a product or something that's coming online that could become a really big growth product. It's about hedging your bets and understanding how you can try and ensure that, if one's doing well, the other one is perhaps going the other way, and you are able to cover your back slightly with a pair and not just have an open trade. Right, ATRs.
Well, it was just one more thing, actually, I was just going to show that might be useful, is when you're looking at your two items, there is an indicator called correlation coefficient. So we've got Microsoft up. If we choose, and then you choose another symbol. So I've got the Microsoft chart up. If I compare it against Google, what it's going to do is at the bottom, it's going to show me my correlation coefficient. And once it's at 1, that is highly correlated. So you can see over time how correlated two instruments are.
Nice. So how did you get to that setting again?
So I went to indicators.
So the screen is really far away from where I'm sitting.
I'll do a bit of zooming in a sec.
Ah,
you go to correlation.
amazing.
Correlation there.
Okay.
So that's an indicator that you can add. And once you've added it, it shows your level of correlation. So as you can see, there are many times where, if you look over here, this is when Microsoft and Google were very highly correlated. And so that is a measure of the level of correlation between the two.
Perfect. And then I guess for the pairs, you want to look for those big dips, right?
Well, I mean, I guess what this is showing is that even though they're highly correlated stocks, you can still see that at times they are not correlated. But obviously, when they diverge, they're going to be less correlated. But that gives you kind of that's showing you at any one time how correlated they are.
Great. Perfect. That's actually a really good illustration to what I was going to remind our trader friends, that something that is, very correlated can break out and become uncorrelated, but be aware that this doesn't last, forever. The trend is your friend until it's no longer your friend. So make sure you have your alerts set in place and your stops and losses. Right, ATRs.
ATRs. So we were talking about ATRs last week, weren't we? ATR is average true range. The reason we were talking about it was because we got a question that said, how can we take volatility into account when setting our stop level and therefore our position size? So we showed ATR, and the question we got back was, how can you use volatility-based stops, ATR, with a trailing stop at the same time. So we'll just run through that to answer that question. So anything in particular you think it would be good to use? Any instrument you like?
Ooh, but just because we are now in the countdown to Nvidia's results, and the other big one is Salesforce. One of those. I mean, take your fancy.
Let's do Salesforce. We always do Nvidia, so let's do Salesforce.
Yeah, let's do Salesforce.
Okay, so bring back up my screen, please. We'll bring up Salesforce. Okay, so I'll take that off for now so we can run through how to do it. So the reason for doing this is if you want to use volatility to set your stop distance away, because if you're always using the same stop distance away, you're not taking into account volatility and you're perhaps either taking on too much or too little risk. So one way of incorporating volatility into how you set your stops is something called ATR. Now, up here, if I go to my indicators, which is that little chart there, I open that up. We have average true range here, which is, we shorten to ATR, don't we? So the average true range indicator measures the volatility of the instrument, and you can use it to dictate elements like your position size, your stop loss, or your take profit distance. It provides an average of the range seen over the past number of candles. So a high ATR indicates high volatility, and a low ATR shows low volatility. So I'll turn that on. In very simple terms, this is saying that the average movement per day was, as I'm hovering over, 961. And this is looking at the last 14 days. Last 14 days is a nice kind of range to look at. Last couple of weeks, we're saying the average range per day was 961. Does that make sense about what that's showing?
Yep.
So we've got our ATR, and as we discussed last time, the general rule is to multiply that by somewhere between 1.5 and 3. And you questioned that because I went for 2, and I went for 2 just because 2 is nice, easy maths, isn't it?
Yeah.
But to me, that's the kind of range you want to be looking at, multiplying that number by between 1.5 and 3, because that's giving you kind of roughly twice the volatility that we've seen over the past.
It's a safe range.
It's kind of it's a roughly safe range, yeah. So to set our stop distance away, we take that 961 and we times it by 2. I'm going to round that to a nice even 2,000. So if we're going long, we're going to set our stop at 2,000 away. And we've done that using the fact that our ATR is just pushing 1,000 and we've multiplied it by 2. So that's how we set our stop distance away. And bear in mind, we would then find our position size by starting to put in our size and seeing how much money we were risking. So for example, if I'm going £1 a point, I'm risking £2,000. So whatever rules you have around how much of your total pot you risk per trade, you can see that clearly there because you've set your stop at 2,000 away and you found your size that kind of matches your tolerance. But the question was, how can we use a trailing stop as well? So you tell me to speed up a little bit. So if we switch that over to trailing stop, we've already got our stop distance, which we've already set using ATR, and we can add our trailing step. And as a reminder, the trailing step is how much the market moves before it moves your stop.
Nice. Love that. And that will be clipped up and we'll put it on the platform so you can watch it in your own time. We have got just a 3-minute break. Stay where you are, get your cup of tea, come back. But thank you so much. That was really useful.
You're very welcome.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Welcome to your beginner's guide to options. Right, so we're now 5 lessons through. We've looked at the definition of puts, of calls. We've looked at intrinsic versus extrinsic. And we've looked at moneyness, right? So today, again, we're going to put all that into a practical lesson. I'm going to take you from start to finish of going, how do I buy a put on the S&P? How do I buy a call on Nvidia? How do you actually use the platform, right? Now, you can see here, I've got the spider up. At the top, you can see this thing called IV rank. Now, we haven't done the lesson on IV yet, but just know that's how volatile the S&P is at the moment relative to its own history, right? So 29, it's not as low as it gets, but it is on the low side, right? Think of it like your RSI in technical analysis world, right? Below 30 means you generally, maybe you wouldn't want, it wouldn't be the ideal time to sell options. So today we're going to look at buying options on the S&P. Now, what are your views? What do we think of the S&P at the moment? It's tricky, isn't it? Because I've been saying, oh, the S&P is overvalued since 5,400. But you see it up at 6,100 and it has a 3% pullback, and suddenly you think, oh, okay, it's down 3% from its highs. It should never have been there in the first place. That's my thinking. So, what do we do in Tasty World? Well, Tasty World, you want to look around about 45 days out from expiry, right? That is your zone, your perfect Goldilocks area of numbers of days to expiry when you can trade options. So at the moment, what I would do is go on the left-hand side to trade, right? You've got your positions, that's your portfolio. You've got the trade function and then activity. So I can see everything I've done in previous trades. I was quite active last night because there was a lot going on. And then watch lists and things like that. But this button here, trade, is the one you want to look at. That gives us this grid. Now, it looks a bit complicated, doesn't it? And that's what I thought when I first came to the Tasty platform. I said, whoa, there's a lot of things going on there. I'm not sure exactly what to look at first. You know, what can I take from those boxes? Well, luckily, because I actually traded options for a while, this is a little bit similar to Bloomberg, right? And the Bloomberg world, where you've got all the options page with all the puts on the left-hand side. The puts on the left-hand side. Go mad. The calls on the left-hand side, right? So the higher the stock price, the lower you're going down the page, right? So think of this as an increase. Then on the right-hand side is your puts. So always think on your right hand is these options to sell, okay? And your left hand, now that might be opposite Roy around on the TV, but your left hand is your right to call a stock to you, right? So you're putting stock away from you, you're putting the risk onto somebody else, or you're calling stock to you. So on the left-hand side is the calls, and let's open up the April 17th. That's 51 days until April now. 51 days to the start of summer, people. How exciting is that? Must be about London Marathon time as well, April 17th. So 51 days away, that's our expiry to start looking at soon. Now you can see on the left-hand side are all those call options, right? And you can see it goes. Some people think this is, you know, the opposite way around, but it's not. That's the way the experts do it. That's the way it always happens on the trading floor, is that we move down and the numbers get higher. So currently trading 597.6. That's what this cool little circle shows you, right? That's exactly where it's trading at the moment. 597.6. And this is on the SPDR, the S&P 500 ETF. So the equivalent of 59, you know, about divided by 10, just for the sake of simplicity. Now, if we want to buy a put option which is at the money, remember you've done all that work now, okay? Lesson 1, lesson 2, lesson 3. If you want to buy a put that is at the money, this yellow line shows you where at the money is, then you click on the 12.03, right? So now I've clicked there, and down below, I can see what that order would consist of. I would purchase one contract for the April 17th expiry, which is 51 days away. The strike price, remember that? The strike of that put option is 597. So I have the right, but not the obligation, to sell at 597. So if the market goes lower than that, that option would be in the money. Remember that term, in the money. So if it goes down to 592, 585, 520, then that option will be in the money at expiry. It will have intrinsic value. Therefore, this will still have a price, okay, because I am buying the put. I am BTO. Do I hear any guesses as to what BTO stands for? In the chat, let me see what your BTOs are. That's correct. Buy to open. You're buying to open, the opposite of buying to close, and you're paying 12 for it. Okay, that can be 12 ticks, that can be $12, however you want to think of it. You're paying 12. Now, that is, excuse my screen a little bit, the gallery should be watching that. Take it off, thank you guys. Let me just fix the computer a bit. Away from numbers saying that he uses call up a friend and put down a poorly pet. calling up a friend or putting down a poorly pet. That's an interesting way. That's the first time I've heard those, Neil. Thank you. All suggestions are welcome. So we're paying $12 for a 597 put. Right? Okay. That's what do I think? It gives me a little bit of protection, right? Now, it tells me there's a 38% chance of me making profit here. Let's zoom back in to there. Probability of profit, 38%. Now that is calculated because the delta, which we're going to go through later this week, right? The delta is 49. That's as simple as if I had a coin, I would toss it in the air, heads or tails. I don't know whether this is going to finish in the money or out of the money because the market's right there. When it's at the money, there is a 50-50 chance of it going up or down and therefore finishing in the money or out the money. Okay? When you're at the money, the delta is going to be close to 50. In this instance, it's 49. Okay? So that would be a 50% chance of a probability of profit. However, remember, you've got to pay $12 for it. So that $12 takes the probability of profit down to 38. And that's just as simple as going down to 585, right, where your break even is. And you can see it's about a 36, 37 delta there. So once you work through the financing costs and things like that, interest rates, it ends up as 38. All right? So it's simple, right? 50% chance of profit because you're at the money. It's a toss of the coin. But you're having to pay $12 to have that lottery ticket, that car insurance, that optionality. Therefore, you take the strike price minus what you're paying for it, which is $12. That takes your delta down to 38, which means you got a 38% chance of this ending up down there and you making profit. That's the way it's worked out, right? But back to simplicity. All we would do now, if we're happy to pay $12 to have insurance on the S&P, we'd look at the max profit. The max profit doesn't really tell us much there. I'm not a big fan of that because, of course, the S&P is not going to zero. So there's no way you're going to make this huge, big profit of 58,000, right? But your max loss is $1,200 because you're paying $12 times the multiplier of the S&P contract. And I'm doing it in one contract. So for every one contract I'm buying, I'm paying $1,200. What if you say, Rich, that's a bit expensive, and I don't think the S&P is going to go down past 5,700, right? So I envisage about a 4% sell-off from here. Well, in that case, what we can do is we can sell the option at 575, right? We're selling that option as well as buying the one higher up. So I click on this, the bid for the 575 put. And that means I receive $6.33 for that, right? I'm having to pay 12 to sell the one higher up, but I'm then receiving 6. Those two net off against each other, right? So now the structure is a put spread, a put vertical. It's vertical because I'm buying a 597, I'm selling a 575. Right? So I'm paying 12, I'm receiving 633. Therefore, the mid price, the mid cost of that is $5.65. All I've done is I've limited my maximum profit now to 1,635. That's if it goes down. No matter how far down the S&P goes, I can only make 1,635 for this if I do nothing until expiry. Right? it can be down 25% and I still only make 1,600. But because of that, my cost of doing the trade has plummeted, right? The cost of doing it is now only $565. And I can make 3 times that for just a 4% sell-off before April. Yes, that's a bit of me, that is. So you can play around with this as much as you want. That tells you what the capital effect will be, i.e. the margin, right? The buying power requirement, just like the margin in your IG. But overall, this gives me the ability to be in profit. That's shown from the green. Okay, the green here. That's where I start to get into profit because, of course, I've paid $5.60. So the strike price minus the cost of entry into the nightclub, that takes us down to around that 592 level. Everything from there lower, every move lower is profit all the way down to 0. Right? That would be, and if we finish down here, that would be my 1,600 profit. That's how you buy a put. That's how you buy a put spread. And it's the exact opposite for a call. Okay? So we'd simply, if we wanted to buy the 598s, we would be paying 14.5 for that. Exact same. Right? You click on the right-hand side, the offer to buy. You click on the left-hand side or the bid to sell, and that's shown by this red thing here. Okay. Now, best thing about the Tasty platform, right, or at least in the top 5, is I can just drag it. Look at that. I can just drag it down if I want to go. Okay, no, 595, 594. I just drag that down. Now, that is your first real practical lesson on putting a trade on start to finish on Tasty. I've looked at the BP effect, the buying power. I've looked at what my max profits are, thinking, oh, I don't really want to spend $1,200. That's a bit too much for me. So I'm going to put on a spread. That spread can even be tighter and you pay less for it. We've looked at April, 51 days out, number of days we know. And then you'd have your first trade on the S&P on the put side. So we're going to keep that in practical. We're going to do theory. We're going to keep doing practical, and we keep on not just reading at you, but actually showing you exactly how to do it. Thank you very much for joining us today. That is the end of the live show, but Talking Shop is coming up now. That's this fantastic podcast and live cast that the boys have been working hard on, and they're talking all about trade management today. That's coming up after the break. I'll see you tomorrow.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With 0 commission on US stocks, why wait? Download IG Invest today. Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With 0 commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
With yourself, most people break those types of rules.
Like the emotions that are running in between, like for me when I'm trading on the live compared to the demo. When I'm on the demo, I ice in my veins, I hold the position.
Position sizing also comes into this. Position sizing is so key.
The market will always humble you at some point and give you a slap, no matter who you are.
I want to open a trading account. What does success look like? Welcome to another episode of Talking Shop with IG. And this is a new one for us. We're simultaneously going out live on Trade Live with IG, and it's going to be recorded for a podcast. So, emerging of the worlds. And I'm joined by my glamorous assistants, Pete Ward.
Hello.
And Ronnie. Ronnie Agning is back.
Back again. Another substitution.
Back once again with the Renegade Master, right?
Exactly.
Pete, you're back. You weren't with us a couple of weeks ago. Where were you?
Yeah, no, that was late shift, I think it was. I was seeing a client. That was it.
Oh, yeah.
Oh, yeah. One of those.
It's clients first, you know that.
Clients first.
Champion them.
That's it.
We've got to champion the clients.
But yeah, Ronnie did a great job, so I've come back to fight for my seat.
I've got to keep my spot. Sean's out.
Sean's out. Sean's on the late shift today. We've got to keep this. We're keeping this rolling, right? So we're keeping a rolling crowd.
Yeah.
Of people that are going out, carving their careers on Trade Live with IG.
and then you move into the fast lane. Then you come into talking shop, and we're going to be here each week.
Exactly. This is the A team.
This is the A team. So what are we talking about this week? This week, it's all about the trading plan. We're continuing our Tradecraft series. We're here to not tell you, what markets are the most interesting or what setups to use and all this kind of stuff. What we're here to do is to say, how do we act with intent? So when you are trading, how can we give you the tools to help you succeed? And this week, it's all about trading with a plan, trading with purpose. So I'll kick us off just with a quick definition. We actually used these guys last week, but the Corporate Finance Institute defines a trading plan as a systematic approach used to identify and trade securities based on several variables, such as investment objectives, risks, and time. A trading plan lays out your procedures and conditions for which to search for asset classes and execute trades. And kind of with that bubble, we know trading is, and having a plan is more than just trading with a hunch. Right? You can't look at something if you haven't done some form of research. And so what I want to just kind of use to introduce this discussion is what are some of the essential elements that you see in a trading plan? What does a trading plan mean to you both?
Yeah, for me personally, it's like you said, not trading on a hunch, having a systematic approach to it. So always try to define my entries and my exits before I actually go into it, and make sure that I know what I'm trading. So I'm not like a dog chasing its own tail, running after the next trend and see what's ever moving. So being systematic and having the criteria that I select when I trade.
Yeah, interesting. I think I've tried a number of different things, I think, over the years in terms of a trading plan, whether that's like a numeric target, whether it's a percentage amount. But I think what you try to refine, I guess, over time is a clear, like you say, clear entry and discipline, basically. Trying to put that discipline in place where you don't repeat certain mistakes of the past. Main one being don't average in. That's the kind of one that I try to keep at the forefront of my mind. I think there's a great slogan. One of my clients told me about this. He said that he used to work for Paul Tudor Jones.
Oh yeah.
And he said that in his office he had a big slogan above his desk, which is "Losers average losers." And he's like, if you remember that, you won't go far wrong. And to be fair, it's kind of correct. So I think having that in my plan is definitely part of it. And then a clear level at which you go, right, okay, it's done what I wanted it to do. I'm never going to get the top, I'm never going to get the bottom. Let's take something out of the journey and then exit.
Yeah, I think for me, it's about being intentional. I've had runs in the past where I know that I'm punting. And that's fine, I think, if you live in that kind of sporting world and you want to use this as a way to express just a view. But I think as you become more of an accomplished trader, you need to sit there and you need to have intent. And so I haven't yet found success in terms of making a specific target, because I worry that if you don't hit it, it then gives you more problems down the road when you're starting to chase a specific goal, like a specific financial amount or a specific number of points. Ambition can almost be trader's worst enemy.
Yeah, you can definitely add more pressure to yourself, right? If you go, right, okay, I need to make 500 quid a week, and let's say you're at 300 or whatever, but there's no setup and it's Friday afternoon, chances are you go in, you're probably going to lose that 300.
Yeah, that's when you're taking those unnecessary risks that you don't want to.
Yeah, but if you've got that pressure on yourself to say, well, I need to finish the week and close the laptop and say that I've banked the 500, you're going to go back in. So I think a trading plan is helpful in those sorts of scenarios, as long as you're not too married to a financial amount. I think we've touched on it before in this series of kind of risk management, and we're talking about loss prevention, and we're talking about the capital protection, as opposed to trying to make money. We're trying to not lose money, right?
Exactly. That's the most important thing.
So I think that's important.
Yeah. For me, I think trading is one of those slightly weird ventures. If you needed to be qualified to go and do something in any other walk of life, you've got to sit a test, right? Driving test. For us, you walk in the front door, we're going to ask you to go through a series. We're doing it with some of the guys that have just joined the team now. We're going to simulate a bunch of client phone calls with clients. If you wanted to go on the Trade Live with IG show, we're going to do some dry runs with you before. ventures that are valuable require you to do some kind of qualification or some kind of test beforehand, but trading doesn't, right? You open the account. We used to have a kind of a coach here that helped us out with some training. He said, right, here's your badge, here's your gun, you're the sheriff now, right?
Yeah.
And it doesn't really work like that when you're going to go and blindly take a leverage position in something you don't really know about.
Yeah, that's when you end up paying your tuitions to the markets.
Yeah, that's it. Yeah, it could be an expensive private school. Right?
Yeah, very much so.
But yeah, I mean, I think, and that's the key differential in what we do here, I guess, with the leverage side of the business, on the spread betting and the CFDs, is people can come to trading, and if they come to it in the form of share dealing or ISA share dealing or whatever that might be, you might have the view that you go, right, okay, well, I want to buy this stock, and if it doesn't go too well, I'm going to own it until it does go well, right? So then you can get, right, this is a long-term thing. And your trading plan then is really wait for it to go up.
Yeah.
Whereas if you're trading on leverage on an intraday, intra-week basis, you can't have that mindset. You've got to go, right, I'm going in because of this reason. And if it goes wrong, I'm coming out here. And if it goes right, then I'm either going to go with it or I'm going to come out at a certain point.
Yeah.
You've got to actively manage it. And I think that's the key differential.
I think so. I think that's the key difference for me in terms of trading and investing. Trading is, I've got an idea, I'm going to put it on. I've got very clear criteria about when this trade is coming off. And for me, it's not a time thing. It's if this stop is triggered or if my target gets met for whatever reason, that's basically forming the best part of my plan. What I haven't added, just because we are in this new fancy world of live, if you do have any questions, we are streaming this on the platform in real time, also on YouTube. So we're piggybacking on the Trade Live with IG Tech. If there's any questions, we're going to try and catch them at the end. So we're aiming to be on until about 10:30. So if you've got any questions at all to put to the guys, pop them in the chat and let us know. To move into the kind of nuts and bolts of this question then, I've seen people get bogged down in analysis paralysis, where there's just too many things to read. If a new client comes up to me and says, what's a strategy? There's countless. So what would you say as some advice to someone who's trying to find that sweet spot between research and actually pulling the trigger? So what do you need as a fundamental? What are the couple of things that you need fundamentally to be ready in order to then be confident to take a trade?
Yeah. So one thing that I often do is sort of, like you said, there's a difference between investing and trading. So when you're trading, you have to keep in mind that you're trading on a shorter sort of horizon. So I always I like to follow the news to see what's actually going to happen. Based on that, what I read, what's happened, I make a decision. Right, this has happened. This is what I think will happen. And then after that, once I have that sort of criteria, I then go on the chart, see where it's trading, and then from there find, okay, we ended here, I think, because of X, Y, and Z that happened yesterday. I think we're going to end up here. If I'm wrong, I have my exit level here, because I'd rather minimize my loss than, let it run and come back around. Because if you let it run forever, you're just going to end up losing your account to overnight funding.
Humans are the lowest edge in this game, I think, because of emotion.
Yeah.
Because of emotion, because of ambition. So you've got to be rules-based. You've got to be either fundamental based, and then you've got to look at things like, okay, is this a mean reverting strategy, or is this a breakout strategy, or is this a buy the dip type of long-term investment?
Yeah.
It isn't, unfortunately, Lambos and get rich quick TikToks. No. It's definitely not the case.
Yeah, you've got to do some degree of work, right? But you also need to act, and I think that's a problem that a lot of people face when they start trading, is that they are almost too hesitant to get into the market. And they want to stick around, maybe watching what could have happened, paper trading, demo trading, all that sort of stuff, which I think is important for a little bit, as long as you set yourself a time where you go, right, okay, now it's time to actually put something into the market. Because if you don't act, you don't get the actual live feeling of trading and having that risk on. It's like, you play poker for no money on a demo account, you're going to go in on every single hand, right?
Yeah.
Whereas if you're trading and you've got actual, it doesn't need to be a lot, but actual skin in the game, all of a sudden you're live and it's real. So I used to work with a guy, and he used to say, it was quite a good kind of analogy, if a little bit salesy, but he used to say, like, if you want to be a Formula One race car driver, you can't sit on a PS5 all day long playing. You've got to get in the car, right? You've got to feel it. You've got to feel that. And it's the same with the trading. So I think you've got to do your research, have a read around what you want to do, maybe stick to, when you're starting out, just one or two markets. Don't try and, do 20 different things and cross correlations and trading yen against commodities and all this sort of stuff. Just stick to a couple of different things, maybe 2, maybe 3 markets. Get to know the price action on those markets. Get to know the natural prices, where things should be, and then when you're ready with this trade setup, just give it a go in small with a stop.
Yeah, I think our trade of the week product that we've got that Axel runs is if you don't want to use it as a way to trade, that's fine. But I think using it as a tool to understand the thought process behind someone who's managed money, behind someone who is incredibly technically focused, Axel will use a 1% of his account stop every time. That's it. That is the rule, and he'll have no more than 3% of his account at risk at any one time. That in itself, just those restrictive guidelines, if you're honest with yourself, most people break those types of rules.
Yeah, and that is a trading plan, isn't it?
That is exactly a trading plan. Yeah. And you can run the numbers, and there's plenty of assets on our website where you could look at, they've run, they did Axel with his trading coach did a simulation of 100 trades, 20,000 times. So we ran this kind of Monte Carlo simulation again and again and again. And he was looking at trying to test different risk versus reward levels. I think we mentioned it in the maths episode, but I was talking to a client about it yesterday. On a 50% hit rate strategy, which I would say is still quite good, there is a 100% chance that you're going to lose 5 trades in a row at some point.
100% chance.
Yeah, there's over 20,000 simulations.
Yeah, so
there's a 100% chance on a coin flip.
Yeah,
50-50, you're going to lose 5 in a row. Now, if you're risking 20% of your account, that's your account gone.
Yeah.
So if you're risking 1% of your account every single time, that's 5% of your account gone. It's impossible, therefore, if you're trying to keep this to 3% max risk cap, you can't lose more than 3% because you're going to get stopped out by your system. That in itself is you can be fundamentally based. You can say, well, I'm buying BT because of the double downgrade. I want to buy the dip. You could be looking at BP because you want to follow Elliott management into the trade. But if it drops down 1%, you're out, and that's it. And you let the system drive it for you.
Yeah, 100%. That's sort of an important factor that, like we said, you have your predetermined stop levels, but also for me, myself, I know that I've traded both demo and I've traded on the live, and, I get some stake for trading on the demo. But when I compare the two, like the emotions that are running in between, like for me, when I'm trading on the live compared to the demo, when I'm on the demo, ice in my veins, I hold the positions, whatever.
Because it doesn't matter, right?
Exactly, it doesn't matter, just monopoly money. But when it's my real hard-earned money, I know how many client calls I've answered to make this money and trade it. I'm way more careful with it. And, like you said, looking at Axel, you don't have to be a pro. You don't have to spend 30 years doing whatever Axel did, but taking advantage from someone who has and following that, or, adopting it and doing it your own sense, I think that's a really good one. When you can take from others and sort of implement your own criteria and rules, that's where you can build up your own strategy and not following someone blindly, but taking inspiration from them.
Yeah.
What do you know? One of the things we're looking at a bit more at the moment, and I know you've been looking at it with the Tasty product, is trying to use mathematical expectations to set your stops and your limits. So one of the things I've been talking to a few of my guys about is Tasty, you can look at time periods. So you can look at the weekly and the monthly series of options. And granted, this is going to be US stocks, it's going to be US traded futures, but you'll get most of the macro indices over there and FX trades. Using the option construct, it will give you an expectation of what the price move could be in that time period.
Right.
That then, the odds of the market trading at that level. Now, of course, fundamentals can change, right? The C can change, the volatility can change, CPI could come out and the world, drops 5-6% overnight.
Yeah.
But using mathematical expectations and probabilities to start setting your stops, we're starting to get a bit more advanced here, but that feels like a way where, instead of just putting stops on a whim, feels a bit of an easier way for people to start to translate, to say, well, that's where the market is currently pricing it could or couldn't go. Think about it.
Yeah. Yeah. I mean, you can use those. You could dive into, like you say, on Tasty, you can look at percentage of getting there, or look at the delta of something and see the likelihood of that actually occurring, and then place your stops. Or you could just go basic support resistance.
Yeah.
Where are the stress points in the market? Where should I typically be? If you're going to trade, an index, then look at what the daily range is on that index, and then plan accordingly. You know,
that's what I hear.
There's no point trading the FTSE with a 5-point stop. Like you're going to get knocked out, even if it goes right in your direction. It's going to gyrate a little bit because that's what it does, right? So, I think looking at it in terms of, where has been the recent high, where has been the recent low, where is the the sort of the support, where is the resistance, and then just putting your stops kind of just around those levels, really.
Yeah, but how many times have you heard the market makers are out to get me,
Yeah.
or they are the big boys, all this kind of stuff? Support and resistance. I've always struggled with support and resistance just on a basic level, because the chart is the chart, right? Every person looking at that market is looking at exactly the same level that you're looking at, and they're going to say, okay, there's going to be a high here. I'm going to put my stop a couple of ticks above the high, and then that goes. Or you're going to say, I put it a couple of ticks below the low, and it will always happen that the market reverses, because it's just we're so biased and we're so kind of stuck in this loss aversion type of mentality that as soon as you put a stop loss, you go, right, I'm stopped out. Oh, and the market reverses in my face, right? That's just the most frustrating thing.
I mean, it's sort of like, but the clients getting stopped out, or you getting stopped out. I had one session with Axel and a client, and the client said, oh, I never put stop losses. I did it once and I just got stopped out right away. Well, then Axel said that, well, yeah, if you put the stop loss just underneath or too close, of course you're going to get stopped out. There's nothing wrong with having a stop loss a bit further away. Just allow yourself with some breathing room, and everything's not going to go exactly continue with the chart. That's just not how it works. So give yourself some breathing room and allow yourself to take those swings, but have a bottom, like a floor.
Yeah, I think I can see we've got some questions on stops. So we'll come back to some more of these specific ones at the end. And this is going to form part of our Tradecraft series. I think we're going to do a whole episode on stops. I think it just having a whole episode on closing conditions, I think, is really, really important. But to kind of continue the conversation just around plans, what's your take on a trading journal?
So yeah, I mean, I've heard about and I've seen a trading journal. Personally, I think it's a good idea. I just don't know if it's realistic. If you're trading actively, i.e., maybe 10, 20 times a day, are you going to journal and document all of those trades? But then I was, we were talking about this the other day. I was saying, if you were trading pretty much exclusively trading your own money as your job almost, you could build it into your daily structure. So if you're on the screen, from UK Open until after, I don't know, US Open, and then you do the UK close, you could put in 40 minutes at the end of the day to say, right, let's go through what I've done and what's worked and what hasn't. And I think it'd be a valuable thing to do. It's just whether or not it's realistic.
How many people do you reckon that are trading 20 times a day are genuinely doing it profitably?
I think it's very few people.
Small, right?
Yeah.
Because then if you're going to be that active, it helps keep the lights on at all your brokerage accounts. Fantastic, thank you very much. But you're paying a lot of spread away, so that's going to eat into your profits every single time. And it's not. You start to think about, are we playing this game in the most efficient way? Well, probably not. If you were to swing a position, we have a guy that calls
speak to day traders and they go, well, I'm not paying anything overnight then because I'm done. And I shut the laptop for the day. And you go, yeah, I get that. I do hear that.
Yeah, but effectively, if you're trading 20 times a day, you're effectively scalping, right? Like, or some sort
more
of
than
scalping.
likely, yeah, scalping index.
Yeah, you're effectively scalping. And then you're just taking these tiny, tiny wins, which is great until you get a massive loss and all of your 1 month of profits are eaten up.
But then if you've not got discipline.
If you've not got discipline, right? And position sizing also comes into this. Position sizing is so key. If you're risking 1% of your account, and this we will go into in another episode, because in fact, it's going to be next week. I've already planned it, so sneak peek. Position sizing next week. But if you set a stop distance first, okay, because you've got to take the view that if you're going to drive the car, you're going to go out with insurance, okay? Because otherwise, the unthinkable could happen. You put a stop that's 10 points away, and you're trying to risk 1% of your account. Your position size is then driven by 10 points divided by 1% of your account. That's where you get your position size from.
Yeah.
And of course, if you then continue to think about this in an optimal way, if you make 5 losses, you've lost 5% of your account, well, your account is now worth 95%. So your optimal position sizing now needs to be lower.
Yeah.
So the idea is you're constantly capital preserving each time. And it works both ways as well. So the idea is that you dial up your size when you're growing. Otherwise, you're never going to make exponential returns. You're never going to make this a fruitful discussion. So look, what are the nuts and bolts of a trading plan? being rules-based or being technical or being discretionary, that's all okay. Be very specific about how you manage risk. I would say be very specific about your entry and exit criteria. Risk management, so using stops, optimal position sizing, knowing where your risk reward is. These things are all super, super key. And a trading journal, look, if you're trading once or twice a day, I think it works. I think you don't have to write, War and Peace, but you just need to be honest with yourself and say, I've entered because of this reason. I've left because of this reason. My setup that I'm choosing is I've seen 3 green candles and I'm below the RSI and I'm breaking above a MAC, whatever it is. You then, I genuinely think if you were to document 100 trades and you were just testing different things, right? And you're jumping between strategies or you're jumping between setups, do it in tiny size. You've then got a database that you can then query your own trades and say, well, actually, trading gold at 3 in the mornings, that's out straight away because I've tested that hypothesis and that doesn't work, gone. And you've then got that database to refer back to.
Yeah.
Well, it comes with experience.
What columns would you have in your trading plan then if you were going to journal it?
For me, entry, reason, why, so my setup, opening level, closing level, reason for closing. And then the one thing I'm not good at is having some form of confidence level in it. Because you can go in and you say, right, I'm really confident on this trade, ranked, and Axel does it really, really well. He ranks his emotions and he ranks his confidence levels. So is he tired, right? And he got so granular because he's traded for 30 years that he knows that if he's tired or if he's had an argument at home or that the kids have kept him up all night or that he's got a difficult meeting to deal with at work, those things create low edge environments for him. But you don't know that until you've back tested it in theory by having a bit of a note on what you're doing.
Yeah, I think the most important thing is it's all great taking notes and having 100 columns, but the most important thing is that you actually look back, read them, and then take that into consideration, and don't hit yourself with the most dangerous word in the world, the most dangerous words in the world of finance, which is this time it'll be different. So yeah, follow your actual rules and take learning from that.
Boring though, right?
Yeah, but then they always say you've got to kind of make trading a little bit boring, right? I know that everyone wants to sort of rock and roll. Let's hit a home run on every trade.
Yeah.
But realistically, you've got to make it a system that works for you more than X amount of the time, and that makes you money over the course of a year or a month or whatever it is that you want to try and do it at. But having, as soon as you engage with risk reward ratios, stop and a limit, and a percentage of your account as your size, that is pretty much a trading plan straight away there. And if you stick with that, it will make it a little bit more boring, but it'll probably make it a bit more, you give more longevity to it.
I have a historic example of what happens when you don't follow, or what happens when you follow your trading rules and when you don't follow them. So are you guys familiar with the historic trader Jesse Livermore?
Yeah.
The Confessions of a Stock Operator.
Yeah. So he made over 100 million by shorting the stock market because he had his clear-cut rules that he always followed. However, success went to his head. And as Bill Gates says, success is a lousy teacher. So success went to his head. He ignored his own trading rules and over-leveraged and took on more risk than he actually should have done, and he lost everything.
Well, in the words of the great Mike Tyson, right? Everyone's got a plan so they get punched in the face.
Yeah.
And then all of a sudden you're playing defense.
Yeah, and stay humble, Stay humble, eh? Like, just because you are on a great run doesn't mean you'll continue forever, and don't stray away from what brought you success.
Yeah, well, that's one of the best things to learn, isn't it? Is that the market will always humble you at some point and give you a slap, no matter who you are.
Yeah.
So yeah, the minute you get cocky, the minute you get right, okay, this is really working for me, I'm going to triple up my size, or I've had three great weeks, I can afford to YOLO it all into my final week, will invariably give it back. Yeah, as soon as you break that model. So discipline, like we've said from the start, is the key. And I think you can't sit here and say things like, right, never average down, because people will average down, right?
Yeah.
So then you go, right, well, how do you frame that so that you can do it, but do it within a bit more of a confined space? You can say, right, okay, well, I want my overall position size to be X, and I'm going to clip in
1/10,
and I'm going to clip in, and I'm going to do 10 clips if it goes to this bit. But then I know that that's the limited size of my position.
Yeah.
Okay. And then you've got a more realistic area where you go, okay, yeah, no, I liked it there. I still like it, but it's a bit cheaper, so I'll grab a little bit more. But I'm not going to do the same size as my max size 10 times and
Yeah.
end up catching a piano, basically.
Yeah.
So I think that's important. You know, we sit here and we're talking about trading, and you've got to be realistic that the book says this, but realistically, humans will do something slightly different. They will flex that, right?
Yeah.
And I think that's fine as long as you keep your notional size under wraps and under control.
Well, think about
it. You do get blown up, especially on leverage. You can do that, like you say, you can do the scalping side of things. You can do the swing trading. But as soon as you get too big, you can get caught out.
Well, let's think about it, right? What to kind of move the conversation on then. So we've spoken about what a plan is and how it can be very simply defined, and then how you can kind of start to think about that. The other side of this is, what do you define success as, right? If you're sitting there as an ambitious new trader and you're trying to say, right, I want to open a trading account, what does success look like? We have a question about setting goals, and should we aim for an amount per week, per month?
Yeah.
What's your take?
In my opinion, if you don't lose money, you're doing brilliantly. I mean, it's like Warren Buffett said, first rule of investing is don't lose money. Second rule is never forget rule number one. I think just not losing money is a great start for a new trader, a new beginner coming in. As long as your account doesn't shrink, I think you're doing something well, because historically we look, majority of people lose money. So establishing a plan that allows you to maybe grow it a tiny bit or whatever is fine, but just try not to lose money and you'll be golden.
Yeah, I like to kind of, rather than setting a numeric target, I think it's good to keep an account size. And so if you're, happy playing with a 20 grand account, and let's say you have a particularly good week and it takes up to 24, take the 4 away and start the next week with the same size.
Yeah.
Instead of trying to go, right, okay, well, now I've got 20% more, I'm now going to do bigger trades. And then all of a sudden you do 5 wrong trades in a row, you're down to 10 grand and you busted half your account.
Yeah.
So yeah, that sort of idea of keeping the book size the same, if you can, and just, try and farm off some money.
Yeah, makes sense. For me, it's trading's part of a portfolio. So I keep my passive kind of market-based investing in my ISA, in my pension. So I'm long the market naturally through some ETFs, through some investment trusts, and some individual stocks. Right, that's that. Trading is a game to see if I can make some money, and the market's going to reward you or it's not. So I actually think setting an amount of money on it is quite dangerous, because if you say you want to make 200 quid a day, right, and we know that you can break the statistics down. Even on a 1% risk, you can lose 3 trades in a row pretty quickly. So you've lost 3% of your account, right? If you've defined the size as such that that isn't a material amount of capital to your overall wealth, you're not going to go on that psychological tilt. But what you are going to do is you're victim to your own ambition.
Yeah.
Because you're now saying, well, I said to myself, I'm going to make 200 quid. My plan says I'm going to make 200 quid. Now you're chasing. So even with the best laid plans, if you start to then think about a fixed amount of money, I think you can really fall into it. For me, it's about the process. If I can sit there and say, this week I've traded with 1% risk, I've genuinely optimized my position sizing. If I've lost money, I've lost money. It's just the market, right? You can make money on a 30% hit rate strategy. You can make money on a 20% hit rate strategy if you manage risk properly. But if I've followed my rules and I've not been rewarded for that, so be it.
Yeah.
My question is, how strict should one be with the rules? Like, should you never stray away, allow some flexibility, or should you always stick to your rules, in your opinion?
For me, I still think the human is the weakest part of any trading strategy.
Yeah.
I think we can lean into the maths. Trading is about maths at the end of the day. It's about, percentages. It's about managing an amount of risk. If you change that, not saying you have to change everything, but let's say you've got a setup that you're looking at on the FTSE. Okay? That doesn't mean it's going to automatically apply to the DAX or the euro dollar, right? You're going to have different tools for different fights. So what you're saying is, when do you choose to say, actually, my plan's crap?
Yeah.
This is not a good plan. And maybe that comes after, I don't know, if you've lost 10 in a row and you've now lost 10% of your account, you've got to size down.
Yeah.
Maybe you start to draw some fail safes into it. I use the comparison to a banker or kind of what everyone would define as like a professional trader, someone sat on a prop floor. The reason why these guys are typically more successful than retail traders is because they've got a risk manager on their shoulder. They've got compliance. They've got a below dealing desk that says how much risk they're allowed to take.
Yeah.
You know, quite often if you lose 10 trades, 5 trades in a row, you're done for the day. See ya.
Yeah.
Go home.
Yeah, sort of take back, relax. So I guess the room for flexibility is sort of flexibility in changing the plan and not just pushing out the edges of what you're allowed to do within the plan. Because, you know, as we know, just having a plan, that's a great start, but it needs to be a good plan that works as well. So at a certain point, you have to sort of reconsider, okay, what am I doing wrong here?
Completely. What do you reckon, just before we move on to the next section about how we stick to it, what do you reckon the textbooks, I had a quick look through kind of the internet last night. Perplexity was my boy. He's got it all to do it for me. What do you reckon the most widely accepted kind of wisdom is on how long it takes to become a professional, to become a profitable trader, excuse me?
What, in terms of time?
Yeah.
Does it feed into the 10,000 hours mantra?
That's what I was thinking.
That's generally the benchmark.
But they reckon about a year.
About a year.
About a year.
Yeah. I think you've got to experience a significant loss to get that not knee jerk, but that sort of kick in the behind to basically take it seriously and look at it and go, okay, right, that was too big, or that was too cavalier, or I wasn't looking on the screens, or I was doing something when I wasn't going to be monitoring it. I didn't have any risk management in process. I had a way bigger my trade was way too big for my size of my account. And then from that point on, you then go, right, this is something I really need to pay attention to. And I think, yeah, you're probably right. A year, probably longer.
Yeah. Yeah, I think so.
Yeah.
I think 100%.
So. Especially if you want to learn all the different tools. You know, there's trading with a stop, trading with guaranteed stops, there's using limits, there's averaging into a position, trading on stop, buying with the trend higher up prices, you know, being, you know, I want to get into this, I want to be long. You know, if you did on the FTSE from Christmas, for example, 8100, you go, right, okay, I want to be long this. You could go, right, well, I'll put my initial piece in, and then you go, right, well, if it breaks through 8280, then I think it's going to keep shooting. So you put an order to buy even more on stop. And then, you know, again and again, and you can look at the technical and go, this all clicks in. It's great. Yeah, I'm paying higher prices than what I could be paying here, but I'm going with the trend.
Yeah.
Mm.
And
that's one way that people, you know, learn how to do it. And then obviously we've got all the option stuff.
Yeah.
You know, do you all of a sudden start putting covered strategies together? I think, yeah, it takes years, I would say, to get to the point where you go, right, I know all of the different tools that I've got in my arsenal, and I know how to use them and when to deploy them. And if you can do all of that, then I think you can say you got it as a professional.
Yeah, I mean, Donald, you've mentioned there on the chat, building into positions, completely agree with you, right? What we're talking about here is using position sizing as your plan. So if you're going to average into a position, be super strict to say, I'm not going to average down, losers average losers. But if you've got a target position size in mind, maybe build into that across an average period. If the market then moves in your favor, your optimum goal should be, I need to get that stop to break even as quickly as possible.
Yeah.
And if I then average up, I've still got to be super strict on my overall portfolio risk rules, because I know that I'm now adding risk into my portfolio. I've got to be super strict with that. But we're all human. And I think the point on all of this is, you're not working for a bank.
No, it's personal trading, isn't it?
Personal trading is going to be personal to you. You know, you can't control if the kids are going to have complete fit overnight, and all of a sudden you can't keep an eye on things. So that's why you've got to be super on top of stops and limits. More so for retail traders than anybody else. I want to move on just to talk about like the most common pitfalls. So of course, not having a plan.
Yeah.
Super low edge.
No plan, no exit strategy.
Yeah.
And no real handle on your notional size, or just a complete miscommunication between what you think you're doing and what you're actually doing. You know, what size am I actually swinging in the market? You know, you might think, oh, okay, well, I did 10 quid of FTSE, so therefore I'll do 10 quid of Dow. Well, you know, as we know, the FTSE's a 4-figure number, Wall Street's a 5-figure number. All of a sudden, you've got huge different notional sizes. So a 1% move in one is very different to a 1% move in the other. So it's getting that, just that your mind around, right, what size am I actually controlling in the market? If I've got a 100 grand ticket and there's a 5% move, I know that I could make or lose 5 grand, and I'm okay with that.
Yeah.
I can go to sleep, and you know, I'm going to sleep well. I'm not going to be up all night checking my phone and all this sort of stuff. But if you've got a 100 grand position in, and you know, you're not ready to take a 5% or 10% move, you're only thinking of the upside, you're not thinking of the downside.
Yeah.
You're going to be stressed out. You're going to be chasing your tail. You're going to be over trading.
You get taxed on your ambition at that point.
Yeah.
If you've not controlled it.
Yeah.
If you've not set that stop. I had a conversation with a guy yesterday. He's been a prop trader for years. November had a great month at the start of the month. Got ahead of himself. Gave it all back. Started the account in December. Did even better, but ended December even worse than when he started. And the whole conversation was about, what have I done wrong? And it was about position sizing, ultimately. But we've done some studies on the most common mistakes that our clients make. Number one is over leveraging, right? Over leveraging, risking far too much. What you said, Paul. Pete, not having an edge, not being able to sit there and say this particular mathematical structure that I'm putting in place actually pays me over time. And you can use backtesting, you can use different systems to have a look at that. Not using a stop loss, the third most common. Hopefully, the more you listen to us, the more you watch Trade Live with IG, hopefully this gets drummed in that stops are actually a good thing. They're there to protect you. And averaging into losers. Losers average losers is so key.
Yeah.
Who's ever said that?
Paul Tudor Jones.
Paul Tudor Jones.
But that's the thing about stops is something that I've taken on more recently in my personal trading now as well, is the fact that you've got Axel, who's a 30-year expert who lives and dies by the stops. Don't move the stop, put the stop on, let the stop do what it's meant to do.
Yeah.
If it goes, okay, well, it's not the end of the world. It's actually could have saved me another 100, 200 points. And if I still really love it, you can always have a look at it down there.
Well, no, if you necessarily love it, that's dangerous. If it sets up again.
Yeah.
If your entry conditions are met and you have another look at it.
And then you still want to go, then you've saved yourself that gap.
Yeah.
And I think that's important. And a lot of clients that we speak to, obviously, we're dealing with sort of premium end of the funnel. These typically high funded, high net worth individuals who might be, running their own companies and be, chief execs of this and be the master of what they do. But when it comes to conversations about their account, they can sometimes come to it with that mindset of, well, I don't need to stop because I'll just buy more. I'm like, well, yeah, you probably can, but do you actually really want to be doing that? Or would you rather have a more measured position where you go, right, okay, yeah, I'm in the trade because of these reasons, and I've got to stop on. And it's trying to have that conversation of going, stops aren't just something that a new trader needs to use. They're something that you need to use in all of your trades.
Yeah, effectively moving your stop loss is effectively as bad as not having a stop loss at all. Yeah. I mean, you move it once and then you continue to move it. Oh no, it's gonna turn. I don't want it to hit before it bounces back. I'm gonna look like a schmuck then. No, you look like a schmuck when you move your stop loss and it just continues to go down even further.
Yeah. The one thing I'd recommend, and this is something that as we learn the new Tasty tool that it gives, what Tasty will allow you to do is it looks at options, a scenario. I see we've got a comment about, this is the reason why we trade options. You can have a stop level, you could have a put with a particular strike price. If the market goes lower than it, your put is now going to be increasing in value to offset the losses on your directional play. So your delta is in the change in your account value is zero, in theory, if you build it properly. But then if the market then goes back in your favor, the put's going to go back to zero and you're still in the position. So there's an interesting thing to do there. But what it will do, what Tasty will allow you to do is it allows you to build that trade, and then it gives you a probability of profit. And it gives you a chance, a mathematical chance on this trade is a 70% likely, it's 70% likely that it's going to hit it. Now you might make less, but you've got a high probability trade. And that's the whole kind of mantra. And I think once you start to think about things as odds, I think once you start to think about things as calculated risks, the rest of it just clicks into gear. That we're all just little kind of we're all just swimming around in this sea, all trying to make a little bit of money for ourselves. And you're right, Jugger, as you just mentioned on the comment, no loss is as cheap as the first loss. You're completely right with that one.
Yeah, definitely agree. And Paul Tudor Jones, who actually have some on my notes here, he never risked more than 1% of his trading. Never risked 1% of his to preserve his capital, and his hedge fund has returned over 200% over the time period it's operating. mean, that's brilliant. 200%.
Well, Trade of the Week did, I think, 36% last year.
Yeah.
Risking 1% per position, no more than 3%.
Yeah.
And it's amazing. There's an article on the website when you look at the Trade of the Week section, and Axel does the Talking Technically slot on TV now, IGTV. Sorry, Trade Live with IG. Set my old ways, Trade Live with IG. And it's amazing the payout chart. If you were to look at your own trade analysis on the website, on the platform, I imagine most people will see big green bars and big red bars. So sometimes when you've realised big profits, but also unfortunately times you've realised big losses. The Trade Live with IG payout chart is fascinating because there's big green bars and lots of very fixed size red bars, and you know that mathematically it's the losses will be taken care of in the profits because that's just how it's set up.
And he's running a ratio, say 1 to 3, so he's losing 1, getting 3 if it goes right.
Yeah.
And so the ones that are going right are massively overpaying for the ones that have gone wrong, right?
Yeah.
And it's interesting with the Trade of the Week stuff, because when I looked at it, I thought, these stops are pretty wide in my mind. But actually, with the markets that they're trading, the moves do occur in those sorts of sizes over a week or 2 weeks.
Yeah.
Whereas I think we all get a little bit tunnel vision and go, okay, well, that seems like a massive stop. Like you need a much tighter than that, and you can do a much bigger size.
Yeah.
And therefore you can potentially make a lot more, but you get stopped out.
Yeah.
You get stopped out and lose the money, right? So I think that 1%, just to sort of clarify, I think it's not 1% movement in the product. It's 1% of your capital,
correct,
that you are allocating if it gets stopped out. So then you work out how much you want to do and where your stop needs to be.
Yeah. Well, we're going to talk about position sizing in a fortnight's time. I think that's that topic and actually physically how we set stops. You know, what do you keep an eye on to set stops? I think those two are the biggest topics that we're going to take down next. And we may even get Axel, or we may even get someone in to kind of help us with that conversation. I want to just take one of the questions because I think we've covered a lot of these as we go. Say I owned a share and it's gone down 6% in the last 3 months. Should you have moved on to something else? For me, it's the stock price moving 6% is not in your control, but did you take the loss? And is this one 6% loss, or is this, multiple 1% losses?
Yeah.
Right. It doesn't actually, in theory, it doesn't matter what the underlying is and what it does if you're in control of your own position sizing and your own risk management. A stock moving 6% is a bit of a kick in the nuts if you're still in it, but you can't be.
I guess it's the age-old thing. Just to answer there, Monkey Man's question, it's like, is there an opportunity cost? What could you have done with the money? What else could you have done that would have maybe generated you money or not made you potentially be down money? And also, is the instrument that you're holding paying you anything? Are you getting a dividend? Is there a yield? If you're holding a 6 or 7 or 8% dividend yield in your stock and you're down 6, well, you net up too. So it's not so bad, right? And also, it all comes down to not just necessarily the percentage movement on the stock, but do you still believe in the stock? Is the original thesis for going into it still alive, and you're right and the market's still wrong, in which case you got to hold it, right? You got to hold it and be proven that you were right because you still believe in it. But the minute you stop believing in the trade and you go, I can't take that because it's a loss. Well, if it's unloved and even you don't like it anymore, just cut it.
Yeah.
Just cut it and move on. You don't have to stay married to every single trade out there. You don't have to win on every single trade that you put on. Your trade analytics doesn't have to just show endless green whilst you've got like a horrendous sort of cancerous loss in your account.
Yeah.
Like it's for, you've got to be a realist when you're trading. You've got to go, you can't have this ostrich technique where you go, right, I'll bury my head in the sands, but look at this P&L that I banked. You go, well, no, actually look at your overall equity on your account. What is your account worth right now if you hit the button and close it all? And if it's nowhere near what you are sort of showing on your trading analytics, you're living in a false
this is the only
false life, right? You can't hide anywhere.
Cash is definitely not.
So it's cold, hard facts to face sometimes, but you go, right, you need to take some ownership of this. And
absolutely. But if you start looking at opportunity costs, if you think, all right, I've lost 6% on this, what could I have done instead? Isn't that an easy way to set yourself up for FOMO? Like you sort of look, oh, I could have done this, I could have done that. And then you sort of all of a sudden jump into these trades that you shouldn't have done in the first place.
But this is where it becomes part of your portfolio, right? You'd argue that discussion is exactly what they call the equity risk premium.
Yeah.
Right? If you know the risk-free rate of return at the moment in the UK is 4.25, I think in the States it's 4.5 still.
Yeah.
If you're looking at the S&P and it returns you 10%, are you realistically going to take on the amount of risk to make the difference which at 4.5% is only 5.5% per year. Are you going to bother going through the heartache in order to only achieve 5.5% above the risk-free rate?
Yeah.
Maybe, maybe not. Maybe allocate a third of your portfolio towards the risk-free rate if it's not for you. But 5% risk, this is the problem. This is why the markets have been selling off, have historically sold off when the interest rates go up. It's because the risk premium on top of that risk-free rate, it starts to break down a little bit. But, I think if you've got part of your portfolio which is performing in line with the market, is your long-term view. Trading shouldn't be a long-term view. It should be get in, make a slice, get out.
Well, I mean, this is what we try and always say, isn't it, to our sort of client base? I mean, obviously it's up to them how much they want to allocate to trading on the high-risk products, such as, the CFDs and the spread bet side of things. But we, typically you want to kind of put a gauge around like 5 to 20% of your overall investment pot
of your own net wealth,
realistically, and you want a big chunk of it in some other stuff. You want it in some safer stuff. You want it in that risk-free return ISAs and premium bonds and all that good stuff, right? But then you come to this area of finance with the piece that you have, trying to make, a 4.5% over a year in an ISA. Yeah, that's nice, but on this stuff here, you're looking at 4.5% weekly, monthly, or intraday. The opportunity is there with the leverage. So you go, right, I could get these pretty monumental gains with a portion of my wealth in a tax-free environment, but how do I protect it? And the answer comes back to where we started, which is have a percentage risk that you're willing to lose on each of your trades.
Yeah.
And then you are entering something which could give you magnified gains, but you've got risk management in place. And if you just come to it and go, well, I've got 100 grand and I'm happy to put 20 in here, and I'll just twist it up 200 times and YOLO, I might make $1 million. You're not going to make $1 million.
Yeah.
Okay. But if you come with 20 grand and you have a system and you have risk management and discipline, then over the course of a year, you could do something like that trade of the week return where you're getting 30, 35, 40%.
And that's
in a tax-free environment, right?
That's incredible.
And you go, okay, I've had a great year.
You don't have
a 20 grand ticket, I've taken, 4, 5, 6 grand tax-free. That's paid for, the holiday.
Yeah, I know. You need longevity.
That is fine. You don't need to come and make $1 million, right?
No, imagine trying to.
Everyone wants to.
Imagine trying to start any other job, and you go, right, well, I'm going to be an expert at this overnight.
Yeah.
It takes time to work your way through and get promotions and work your way through different departments.
Yeah.
Before you're in a controlling situation, before you start your own business and stuff. And it's approaching it in that way. So look, I want to round off the discussion. I think it's really important that we revisit the questions properly about position sizing and stops. There's 2 episodes that I'm going to come back to you, so you got my commitment there. But to round up what we've been talking about, discipline is easy to say, but it's really hard to do. Having risk parameters is the most important thing. If you can take anything from this conversation, percentage of your account risk, stops and limits, sizing of how many positions you run at the same time, those types of things, they seem boring, but they're so key. So risk parameters, having an exit strategy. I've seen so many people over egg how important it is that they're looking at this particular MACD, RSI on the way in and couldn't give less of a toss how they get out. That is just as important, if not more.
Think about all the people that made money in Coinbase, MicroStrategy, Bitcoin, all on that move post-Trump.
Yeah.
And how many thought, oh, it's still going higher. And it might be, right? But if you're getting gains like that, you've got to be taking something off the table.
Yeah.
You've done a lot of work to get to that P&L, to see that blue on the screen.
Exactly.
Let's put something in the account. Let's
The
take
good times don't last forever.
Yeah, exactly right. But you say there on the discipline thing, you can do things to make your life easier so that weight on the discipline isn't as much, so that if you do the 1% and you do use a stop, then you make that part of your ingrained process, almost like the sort of atomic habits type thing, where you just embed it as a habit. You go, right, I'm doing a trade, and when I do a trade, I have this 1%, and then you just know, right, my stop's there, and that's it. And then you don't have to worry about that discipline because you've got it in on the trade. It's on.
But it's been done for you. You are disciplined by having that. Away from the numbers, your question, do the declared 30% of people who are trading profitably with IG follow disciplined trade plans? Yes. You can't get away from the fact that yes.
The most successful traders that we talk to are almost like robots when it comes to P&L. They are dispassionate about the numbers. Oh, see, you had a great week. Yeah. I know that I could have a terrible week next week, but I've got a plan and I stick to it. To go, okay, yeah, fine.
I'd also be really wary about the people that want to talk about their wins all the time.
Yeah.
The amount of people we've met over the years.
Anyone that saw weddings, no funerals. You gotta go. There's something lurking here.
But the amount of people that we speak to that talk a really good game. And that you look at we look at their accounts, and unfortunately they're not profitable, and you just think these two things don't add up, and the ego gets in the way, and that's where both that piece we talk about bias and psychology. But look, guys, we're running over time. Thank you so much for listening to us. If you've listened to us live, we welcome to the world of Talking Shop. If you're listening to us on the podcast, it's great to have you guys back. Definitely watch Trade Live with IG. We do this every morning from 7:30. We are back in a fortnight, and I think we're either going to talk about position sizing or we're going to talk about stops. They both deserve their own episodes. So, gents, we're not going to get a margin call this week because we've run out of time. Maybe it's not appropriate for live, just in case we need to edit things out. So we're going to come back. We do a piece on the margin call where we pick the biggest loser in the market this week. We're not going to do that this week.
It'll be Rich's tucked-in T-shirt, I think.
You get the behind the scenes here. He's gone full Jordan Belfort, jeans up here, Nike Cortezes. He's all over the place today. Guys, thank you very much. We'll speak to you in a few weeks' time.
Down goes Fraser into the close. It's Monday, February 24th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco, and Dylan Radigan's in Milan. To take you through the next hour as we wrap up this trading day, futures market closes at 5 Eastern, 4 Central. If you're on the website, you're on the platform, come over to YouTube. Tell us what you're trading today, what you think of this action. A late day sell-off with volatility spiking a full point and stocks losing all those hard-earned gains after the German election results came out yesterday. Gold does push up to a new all-time high. Crude oil remains tethered right around $70 a barrel. Dollar looks like it's still potentially rolling over, although that late-day move in stocks sends the dollar back to its session highs. Overall, it's a full trading week here. We don't have any holidays, so that's the good news. It's a quiet macro week. That's the bad news. In between, we'll have Nvidia earnings on Wednesday. So there's a lot to chew on here. Gentlemen, Friday's sell-off was pretty nasty. Ilya, growth concerns are in play. The PMI release that comes out on Friday morning shows that the economy could be teetering towards recession. Prices are up, growth momentum is down, and stocks, they just don't like it. Ilya, is this a new paradigm moving forward?
New in the sense that it's coming to fruition, familiar to those of us that have been talking about it for the year and a half, basically saying that the world economy is operating on one leg of its three-leg stool. Europe hasn't grown in a year and a half, despite vigorous attempts. China has stalled since reopening from COVID. The U.S. economy, meanwhile, has powered ahead, and the reason it's powered ahead has been the buoyancy in the service sector because manufacturing has basically stalled. Obviously, during the pandemic itself, it was manufacturing that was shining. Most demand went to goods. People were stuck at home. They didn't go out and consume services nearly as much. They just bought stuff and shipped it to their house. Since we've had a rebalancing towards services where goods has been anemic and all this quote-unquote revenge spending has gone to services, and that's been overwhelmingly the source of growth. What we find in these PMI numbers are that the service sector has issued its first contraction in February in 25 months. What we also find is that this is not a one-off, it's the second consecutive month of unexpected weakness in the service sector and therefore in the overall U.S. economy, weakest economic expansion overall in 17 months. That's despite manufacturing improving a bit. When we start to read the details, they get scarier. The confidence indicators about forward-looking expectations, sharply lower. New orders, sharply lower. And the anecdotal questioning of the people in the survey saying all of this is about uncertainty related to federal government policy. Moreover, the uptick in the manufacturing side is being attributed to the front running of tariffs. In other words, a temporary thing. So we have here the makeup of a situation where Europe is not any better off, China is not any better off, the US was the last of the three major global engines to power us forward, and without the service sector, that engine is stopped. So we are in a situation where you could paper over all kinds of stressors as long as there was growth. You could look the other way on tariffs as long as they were more noise than action. You could look the other way on geopolitics. You could look the other way on looming refinancing risk of cheap COVID money. All of those things were digestible as long as there was growth, because that means you could have money tomorrow if you lost money today. Well, that's going away apparently. So if we continue to see more of this, it's liquidation and risk aversion that's on the menu. And of course, that means stocks are expensive, bonds are cheap, so on and so forth.
Dylan, in that PMI report that was released Friday, they made this note that Ilya was alluding to, quote, companies report widespread concerns about the impact of federal government policies ranging from spending cuts to tariffs and geopolitical developments. At what point does the market and does the economy stop thinking that it's bread and circus and theater and it becomes something legitimate that goes into spending plans? Are we at that inflection point yet?
I don't think we are. I think that the desire to believe, it's sort of like a religion at this point. Like, it's going to take a lot. And Ilya, obviously there's plenty of reasons why Ilya, and not just Ilya, others who are reading these tea leaves can be absolutely correct and ultimately, benefit from being correct. But I think also, again, to me, it feels like it's going to take a lot more than a PMI number. What's it going to take? It's going to take some bad, scary jobs number. Mm-hmm. It's going to take some that'll get everybody squirreled up. It's going to take like lowered guidance.
Yeah,
like you're going to get like FedEx being like or Norfolk.
Well, and Walmart kind of gave us that, right?
And
we got a weak retail sales number. Then Walmart comes out and scares everybody with its guidance. Then you get the PMIs, and you go, okay, wait a second.
And then
these things are starting to make a line.
And lighter FedEx, you start to see the sort of leading sectors of the economy worn down. Or just do more of what Ilya's already describing, just more of it in more places, and you throw a jobs number in there. So I'd say you're good to go until the first Friday in March, and then if you get a wacky jobs number, but it's going to take a lot, just because the desire to believe in the glory of the super glide. Not to mention the Pavlovian training of a generation of investors and traders to buy dips.
Yeah, I mean, the first week of March is not to be underplayed here. First of all, March 4th is ostensibly when those tariffs on Mexico and Canada go into effect. And then I would imagine that Friday, the 7th, is when we get the next set of NFPs. That's next week.
Well, you say they're ostensibly going to go into effect next week. To quote the President of the United States directly, I look at some of these agreements and I say, who would ever sign a thing like this? The tariffs will go forward, yes. We'll make up a lot of territory. Our country will be liquid and rich again, end quote. Donald Trump is the person who signed those agreements.
Right.
When he tore up NAFTA and put the USMCA
No,
in
but I
place.
mean, Donald Trump, nothing the man says is true. That's the general principle.
Which means these tariffs are probably not going into place next week, Dylan. If we're going
and also the tariffs that were supposed to go into effect on in the first days of February were going in with this level of conviction until less than 24 hours later. They weren't. They in fact went into effect. They just didn't hold for
which goes
more than 24 hours.
That the oil trade that in 2025, my most winning trading strategy was to sell oil on geopolitical
That's where we're going.
rallies.
Yep.
Yeah.
And my 2025 thesis is to buy the dips on Trumpian terror.
The problem is what these PMIs implies. The tariffs don't have to happen for businesses to freak out about what to do 6 months and 9 months forward. I think that's
because no one
probably the scariest thing of all is that businesses go, listen, maybe they don't happen, but how are we supposed to plan?
I just reoriented a small business that I'm operating out of Italy to focus almost all of the growth and sales strategy within Europe, just to avoid. Who needs the risk? I mean, and this is a flea on a dog's ass in the scope of the business world. But I'm, to the degree to which we're in a meeting with the board saying there's plenty of market in Europe, in the Middle East for our products. Why bother even building an infrastructure right now to deal with America when the whole thing can get blown up on a Tuesday morning with a tweet like a $28 million government grant for housing that, one day it's here, next day it's gone. And I'm sure that the bigger the business, the bigger the risk, the bigger the reason to be more cautious. It can't be good for business, basically, to have no policy clarity, particularly when it comes to imports.
Well, especially when the administration is at odds with itself. I mean, we're reading now that Secretary of State Marco Rubio is scrambling to issue waivers on the unraveling of USAID because all of a sudden it's like, wait, we do want to keep these ISIS prisoners in prison. We don't want them to come out and then come here and do something we don't want them to do. We do want to spend money on containing infectious diseases where they are in Africa because we don't want them to come here. And so there's all these waivers that now come out, but of course the funding is stuck, and The Economist reports extensively on this because the actual bank accounts associated with USAID have been scrubbed. So there's all these court injunctions and waivers, but then things get jammed up. So if you're a business owner and you look at this and you go, okay, well, maybe the tariffs come, they go, but the level of volatility here means that even if I get the last minute 11th hour reprieve, because the whole thing's set up in such a haphazard way, I may get jammed up anyway. So why am I even going to bother? Let me just back up here.
I find it interesting that the market is responding so forcefully intraday with volatility the way that it did, where we spike up at the start of the session, we then drop down lower. Ilya, we were near the lows when you and I were talking midday on Futures Power Hour, and that really was the turning point. And then we jump up from about 17.4 to where we are just north of, we're wrapped around 19 right now. And I suppose that's a different layer to this volatility. There were spikes last week where intraday would spike up and then it'd come back in and the market would rebound. Obviously, we're not seeing that type of action here. But Dylan, I can't help but wonder, right? I'm just, who's the guy that signed the agreement that Trump is bashing right now? According to the White House website, trumpwhitehouse.archives.gov, President Donald J. Trump's U.S. Mexico-Canada agreement delivers a historic win. This is the most modern balance. This is not to say like Donald Trump's such an idiot. Why is he attacking his own trade agreement? No, this is like, where's he operating from? If the tariffs are still coming next week, that's probably a carrot, right? If we're going to try to disentangle Trump lingo, it's probably a carrot to get something sweeter or an indication that more progress is going to be made in some renegotiation with Mexico and Canada. I would posit then, longer term, if all this tariff saber rattling is ultimately a way for him to renegotiate the USMCA that he signed into law without having to
expire next year, by the way.
Right, that is the background here, right? He wants to extend it, but now after seeing it in action since his first term, he thinks that there need to be more provisions made to it. So instead of just simply looking to get it extended, we are effectively changing the scope of the USMCA now, lest Canada and Mexico lose that free trade agreement, which would hurt their economies more than ours. So yeah, Dylan, there's a lot of overhang because of these comments about tariffs, but if trying to just think about this as objectively as possible, if these are stepping stones towards a rewritten trade deal, Trump isn't going to revisit that trade deal in the next year or two. This tariff thing then becomes a sort of Damocles to a non-issue altogether. So I think we're just going to have to deal with this slinky action again, this zigzag, where we're going to get ginned up about this for a few days. Maybe we hear some comments midweek from Trudeau or from
I get it, but how do you? I think Ilya makes an essential point, which is let's assume 95% of the time nothing's going to happen, but there's always a chance something could happen, and whether it happens or not, the fact that the noise machine is at maximum volume is affecting business decisions who are trying to, and that it's like the fear of the thing creates the thing that we fear, even if the thing that you fear never actually happens, which maybe makes no sense, but I think you know exactly what I'm saying.
No, and the velocity of reversal is just so fast that even when something happens, like with USAID, where you go, wait, hold on, not that part, bring that back. It's not so clear cut. And even though that there's been a reversal on the decision, undoing the damage and uncorking whatever bottleneck you've created, it's not so straightforward. And it's not so quick as just changing your mind. So it seems like, reasonably, businesses are looking at this and going, this is just not the kind of environment where I'm going to say, you know what, there is a predictability of the rules of the road whereby I can say, on the strength of these assumptions, I am going to do this or that. You just can't assume. And so as a savvy business owner, you might be inclined to sit back and go, you know what, I have this capital, I'm not going to deploy it. I'm just going to sit on this and wait.
Or I'm going to deploy it into more stable environments that have more predictable policy.
Such as those things exist in an environment where the world's largest economy and its only real source of growth is also the instability.
For sure. Yeah, I mean, there's two different things, right? But anyway, go ahead, Chris. The point is that the stock market is obviously vulnerable, not just for all those reasons, but also because it's still at relatively high levels.
Yes.
Right, and it's not, we talk about firing and these job cuts continuing to rise from the federal government. Apollo Global Management sent out a note this weekend suggesting that with total employment in the U.S. at 160 million, with about 7 million people unemployed and 5 million people changing jobs every month, 300,000 federal jobs on their own lost is not significant. And, how many new jobless claims do we see every single week? About 200,000. So 300,000 jobs lost altogether over the course of a year. It can be absorbed by a strong labor market. However, studies show that for every federal employee, there are 2 contractors. As a result, if we're laying off 300,000 people, the total number of layoffs could ultimately be closer to 1 million. So lobbing off 1 million jobs That's different because if you think about an economy that needs to add about 115,000 every month for the next 12 months to keep the unemployment rate at its current level, you're talking about an economy that's going to add roughly like 1.3 million jobs over the course of a year. And so we're going to take 1 million jobs out of the equation. We're talking about 300,000 jobs added over the next 12 months potentially. That's a very, very, very different type of economic outlook and change in aggregate demand for the economy. But I suppose, Dylan, you mentioned what's going on in Europe right now. I find your perspective on how you're looking to scale a business there locally really insightful. It almost somewhat mirrors what Friedrich Merz, the new German leader, who, assuming the coalition comes together, of the CDU-CSU, was alluding to yesterday, that Europe basically needs to become independent of the U.S. It needs to rapidly rearm itself. It needs to not be so reliant on the people across the pond.
No, it needs to be totally independent so that it can. Right now, Europe is just an appendage to whatever American policy wants and whatever the American economy does. And this is a clear wake-up call for the collective Europe, which is not a small economy or a small group of people. If there was ever an incentive for the sort of petty differences of the French and the Germans and the Spanish and the British and the Austrians and the Italians to let it all go, throw up a huge pile of money, build a huge pile of nuclear weapons, and deregulate and make a more robust market, it should be nothing more than the fact that the United States and Russia are now allies against Europe for the first time in 80 years.
Ilya, we frequently talk about credit spreads widening out as a potential to risk in broader markets. We often look at the OFR, the Financial Stress Index, from the Office of Financial Research, which is still up and running. It is a government website, so that is something that could be removed or the database tinkered with, as we've seen with like the BLS. For people who look at stats, the BLS has gone offline. Census has gone offline at points. So I point to this here. We looked at this during the commercial real estate meltdown. I suppose if we want to talk about that on our chart, we need to go to all here to get really the full purview. We'll let that load quickly. We could see here, this is our commercial real estate bubble issue. Oh no, SVB's failing. Over the past year, the only thing that's come close to that kind of stretch was last August. Very clearly right now, according to this particular set of metrics based on credit, equity valuation, funding, safe assets, volatility, financial stress right now is not that significant.
Right.
Great. Why is the credit market not freaking out the way that equities have over the past 48 hours of trading?
Well, I think you have to look at the whole of what equities are showing you, and I think Dylan's point here is salient. What you're going to need to see a broader freak out is you're going to need to see this stuff start to come out in heavier duty data and become obvious and inescapable for a broader audience. I think what you're looking at here is us looking through some PMI data, some CPI data, which was also worrying, some ISM data that was also worrying, all of which started to tell you the service sector is wobbling in a way that it hasn't before, and this is the pillar of global growth, and there's an issue. But these are early indications, and we've not seen that show up. And when you look at the S&P, it's near the middle of its range from early December. NASDAQ, middle of its range from early December. It's down, but it's not collapsing. There isn't the kind of situation here where you would expect credit crisis-like dynamics where people would go, I am not parting with my cash for any reason, full stop, period. No, you can't get a loan. And then credit spreads would blow out. That's not what we're seeing yet. I think importantly, it was also not what we were seeing in the first half of 2008, which didn't prevent us from seeing what we then saw in the second half. So would you have been wise to wait to be a seller of risk into the second half of '08? Ultimately, no. It would have made sense, and it was much more opportune to be a seller earlier. So obviously, we don't have all of the confirmation, but needless to say, this is the essence of looking for attractive opportunities in markets. You're not looking for the markets to have recognized the issue that you're looking to trade. You're looking to anticipate it to some extent, with evidence, of course. And so when you look at this data and you see the market start to react, but maybe not go into full capitulation, credit squeeze, run for the hills mode, this is your cue to go, maybe I'll get a little bear curious in my exposure. And if everything really hits the fan, that's when I layer in.
Bear curious. I'll never admit to that. Right now it feels like this is a dead spot for stocks, Ilya, from like that long-term perspective. We keep going back and forth. If you're at the midpoint of a multi-month trading range, what do? You like shorting the range near the top? If you want to get long here, this isn't a great spot to get long here because you're kind of catching a falling knife. Tony talks about reading the tape. VIX going out the day near the late session highs, I think says a lot about the action right now. Heading into tomorrow, it's also kind of a typical Monday this year. Mondays and Fridays have produced annualized losses in excess of 35%. Tuesday, Wednesday, Thursdays have produced annualized gains in excess of 40%. Wednesday, I think right now has an annualized gain of 96%. So if you short Friday, Monday, if you're long Tuesday, Wednesday, Thursday, you have had a hell of a year right now. Maybe that continues tomorrow, guys. But as we look into tomorrow's markets, we see a pretty split board here of the ETFs that we track. There's 25, 11 are green, 14 are in the red. The worst performer, SMH. SMH is off by 2.63%. Not sure you guys caught the headline over the weekend, but apparently a TD Cowen analyst did a channel check on how Microsoft's data center applications and leases are going through, and they received word that Microsoft is going around canceling some of its data center contracts, which in context of what we heard last week from Satya Nadella on that podcast, all speaks to a potential overbuild for the arena.
Mm-hmm.
But later in the day, right, where do we, who do you trust is my point. I point that out because we get this, there's a letter that's sent out from Jefferies from their investor relations team that's basically like, look, let me just clip this and pull this into here. Okay. Like Microsoft itself is strongly refuting any change to their data center strategy. And this is just like with Trump. We're hearing two different stories from two different sources about the same exact thing. It's kind of like the mineral rights deal. We get a mineral rights deal that's sent out by Axios today. Is it the real thing? Maybe not, because it seems very dramatically opposed to what we're hearing from Trump himself. The point I'm getting at, though, is oversupply, the overbuilding of railroads, Ilya, certainly seems to be something thematically bothering the markets here on this Monday. We see it Friday. We see it here Monday. How seriously should we take this concern as a potential prick to the bubble at a time when sentiment is clearly ebbing?
I think what you have to respect about the price action here is sort of the defense mechanism that the market would have against headlines like this has been clearly degraded. And so this is the time when the markets might start to get spooked about exactly this kind of stuff. You can shrug off all kinds of things. Again, as long as there's growth, as long as the economy is growing, then if you get shell-shocked, if you lose money, if you make a mistake today, as long as demand overall is there and things are expanding, then there is new money to make tomorrow. If the business cycle is turning inward on itself, or there is at least a credible concern that it is, as we've just discussed, all of a sudden you become much less sure that there is, in fact, new money to have, at least near term. And if that's the case, you're going to be a lot more circumspect about outlays today, because you can say, you know what, I don't want to lose this money. Because what if there's not money tomorrow? Because there's a recession coming, because demand is weakening, et cetera, et cetera, et cetera. So all of a sudden, headlines like this, that 6 months ago, 4 months ago, 2 months ago, might have been shrugged off to say, okay, this is like a one. Does this change the grand and powerful AI future? No. Okay, moving on. But if there's no growth to give you the confidence to say the great and powerful AI future is coming on the timescale you thought, if there is suddenly a question about future money, even in the near term, now you're not so ready to part with capital. Now you're going to care about stuff like this. And this is just one flavor. The market has had a very strong defense system against negative sentiment because growth was powering ahead and indeed accelerating. The end of last year was a period of explosive acceleration in growth. Well, now we're unraveling to the weakest levels in 2 years, as apparently that was some sort of a blow-off sentiment top. Maybe. Now you're going to be vulnerable to things like this. So it's not so much that the headline is very impactful by itself. It's that the market decided to care. That's the big deal.
You know, it's fascinating because these companies, you think that the stock prices in SMH haven't gone anywhere, Dylan, over the past almost, we're 9 months now. We're talking about late May when we start trading into the 240s. And it's now late February and we're still in the 240s. So this is, a year basically now, getting close to it, that semiconductors have stalled out. They were the growth engine for the market in the first half of last year. So the fact that the NASDAQ has been able to push higher says a lot about the spreading of the breath. But one would think that the benefit of time would mean that, okay, well, if we trade sideways for a while, then these ridiculous PE ratios, they can come back in. We can put some, score on the board, right? We can put some crooked numbers up there, get the market confident that our valuations are worthwhile and the earnings will speak for themselves. I would point out that SMH, we look at the historical trailing 12 months PE ratio, where we were last May, it was about 41.6. SMH's trailing 12-month PE ratio as of February 12th is 48.64. So the index hasn't gone anywhere for the past 9 months, and the PE ratios have not come back down. So where's the earnings? Where are the earnings? It's a problem right now for semiconductors, which a few days ago looked like, hey, maybe we're breaking out, but we get this Cohen report, the Microsoft report, we get the Satya Nadella podcast last week. SMH has been going through it. Of course, we have Nvidia earnings this week. Dylan, is this the Holy Grail? Is this what we're waiting for? Is this our savior? Jensen, is he coming to save us?
I mean, it would be amazing if he can do it again. I mean, I tend to think that, we said this going back as almost probably 2, 3, 4 quarters ago, that it's not that Nvidia has stopped performing, although maybe it's relatively more modest. I emphasize relatively, but it's more that Wall Street has gotten better at forecasting it, so that the gap between modeling and analyst projections and reality compressed, such that whatever they did, the earnings report itself was no longer the financial carnival that it once was. I would be shocked if Nvidia does anything that moves the stock in any meaningful way. So I don't think it's I think that, I guess, the most obvious risk is that Nvidia or Jensen specifically says something that is viewed to validate the amplified fears manifest by the so-called channel check at Microsoft. And it all speaks to a market that is anxious to hold on to its lofty valuations, but at the same time is increasingly, and I think understandably, skittish for all the reasons that Ilya's been laying out. So it's hard for me to see. I feel like Nvidia is either a non-event or a bad event. I mean, listen, it'd be entertaining I have no financial position with any of these things right now, but it would be, I would be charmed, I suppose, to see if Nvidia can blow it out and the stock can go up 15% on the day and all the things that it's capable of in the past. That would be a legendary event, but it seems to be the least likely. It's either going to be a non-event or it's going to be viewed as validation of some evidence of trouble in paradise.
Yeah, so one wonders what happens if the same thing happens here as did with the PMIs. So you get a strong manufacturing number, but S&P Global writes up this whole thing about, well, look, the survey suggests that the past 2 months, January and February, is front running of tariffs. This is temporary. And then Nvidia comes out and says, oh, we had these excellent results in the past quarter, but actually our forward guidance from here is much more reserved because tariff risk and supply chains and everything, we need to do our thing and the cooling effect that has on demand and blah, 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 blah. And so what you end up with is a kind of encouraging headline that then gives you forward guidance, much as you had with Walmart, that tells you it isn't the last quarter you need to be worried about. It's the next 3.
I think that it doesn't really matter what happens in the background here. Nvidia is sailing into very tough waters already. There is this discrepancy between how the market's treated companies that are performing well with their earnings and those that are not. And we've seen this quarter that the market has been rewarding those positive earnings releases less than they typically do. How do we define this? If we look at the 2 days before an earnings release and the 2 days after, right? Companies that have beat their earnings estimates last quarter for Q4 2024, they've seen an average price increase of 0.5% in that window, 2 days before, 2 days after. But that's below the 5-year average of a 1% increase during that window. So gains are about half of what they usually are. And then again, we've seen that companies are losing ground. They've seen an average price decrease of about 1.8% in the 2 days before and the 2 days after. They're actually not being punished more than they usually are. That's less than the 5-year average of 2.3% during that same window, but it's lopsided still, right? Sure, the misses aren't hurting as much as they typically do, but the beats are definitely not being rewarded. And I think if we look at the compression on both ends right now, it speaks to a group of investors, not traders, but really the longer term folks who are very much in a holding period. They don't necessarily care what happened in the rearview mirror. What happened in 2024, that's not the fiscal and monetary policy that's going to be guiding us in the future. That's not the geopolitical relationships, the trade barriers that will be guiding us in the future, the earnings that we need to project and look towards. It's a completely different world. The world we just grew up in, with a stock market that was trudging to all-time highs seemingly every 4 or 5 days last year, that world is dead. This is a new one. And this new one, we're still trying to make, heads from tails. We don't know which way to go yet. So a 4-month trading range for ES and the NASDAQ continue. For Nvidia, it's near range lows, you might say, that we're holding up in the fourth quarter. But for a brief interlude here in late January, early February, we're back very much in a place where we were comfortable for the past several months. But a drop below 128, that could be problematic going into the second half of this week. Guys, you mentioned that this is a week where, Nvidia obviously matters a lot. Ilya, you know better than most. The macro data is fairly thin. The bond auction calendar is fairly thin. What's the most important thing that traders need to be watching for, either data-wise, based on the facts, or narrative-wise, based on the stories this week?